both of them. There we go. Uh-oh. That don't look right.
Nobody made your tea, did they?
No, I'll be doing tealess today. All right, that goes there. Do I have to re-sign in? I do, motherfucker. Alrighty. So anyway, how was your short vacation?
Cold.
Cold.
I'm ready to come home. I'm cold and I'm tired.
Oh. Not quite sure if that's good or bad.
Yeah, I don't know.
Okay, it's not made for bloody children. All right, I'm having an issue here. All right.
And you don't have Jacob either, do you?
Nope.
Yeah.
Okay.
No help.
It doesn't help me to go live unless I have an account to go live with. You know what I mean?
Mm-hmm.
Come on. Why aren't you fucking setting up? I have nothing to drink.
See, you miss me.
I know. It's just one of those things.
Ray may not talk during the movie, but she doesn't get you a drink either.
No, she doesn't. And she doesn't even toot on my flute. Could this be it? No! What the fuck? Okay. Could that be it? Is it? Come on. 9:30. Shit! And I'm not live yet. This is not good. All right, so you're going to call me or send me a text when you're getting ready?
Yeah, when the plane's leaving, so you know what time to pick us up. It'll be around noon.
Around noon? So
yeah.
I got to be at the airport around noon?
Yeah. Yeah, plan on noon.
Well, just send me a message when you're getting ready to leave. I'll have to double check my schedule to see what I'm doing tomorrow. I might be busy. You never know.
Well, if something comes up, you let me know, and we'll Uber home. But I bet you'll be there.
You think so?
Yeah. Yeah.
We are having issues.
I guess.
Fuck nuggets.
Yeah.
Why is everything fucking locked? It just doesn't make any... Oh, fuck. That's not gonna fucking work. That looks a little better. Okay. So, did you see everybody you wanted to see?
Oh, not really, but close enough.
Not really, but close enough.
Yeah, you know. This is a short trip.
Well, you want to go longer next time? We're going in the spring or the fall.
Fall.
Fall?
Yeah.
Aren't we going to be in Maine in the fall?
I don't know.
What do you mean you don't know?
We're not gonna miss my class reunion.
Oh no, when's that?
Fall. September.
September.
Yeah.
Okay, so we're gonna get a motorhome and drive the motorhome from Maine to Chicago.
Well, that would be okay.
Okay. Okay, we'll just have to leave the boat in the water and have Stanley deal with it.
Yeah. Suits me, I don't care.
Okay. To proceed with update, close all running. Close. They're not opening, honey.
I don't know what to tell you.
No, you can tell me lots of things. What is it you think you want to tell me?
I wish I could tell you how to get on.
It's not that difficult. It's installing updates.
No. Is that the problem?
Yeah. It's a Sunday night.
Yep, it doesn't take long.
You never know. Alrighty. Well, you get some rest and save my voice for those that are paying for it. And I'm going to get a drink.
I will talk to you in the morning.
Bye, honey.
Bye, babe.
If you wake up in the middle of the night, send me a text. Oh, we're live over here. Oh, I'm just getting started. Trying to get this thing signed in. And it's not signing in, damn it. Oh boy. Sit tight. We're still getting warmed up. Getting warmed up, getting warmed up. Alrighty. It's 8 people here. Oh my, was that 8 or 6? I'm still trying to figure out how to log on. So, just sit tight, relax. I'll get there. Oh. Spoof Move, what's up? Daniel Barry, what's happening? The weekends are always tough, only because getting back online or getting the account back up and ready for me to use takes a while. Joshua, how you doing?
Deep State Hit List sparks Midnight Manhunt.
All right, let's go there. And we're almost ready to go. Joshua, good to hear. Buy and hold stock tips. What's happening? Give me a second. I'm trying to log in, and I'm having issues with not Yahoo Finance, with Thinkorswim. Installing updates still. It's not responding. Installing updates. All right, so we can go to Yahoo Finance. While we're waiting for that to happen, charts. It's going to be a little challenging doing it that way. Oh, I got 13 people here. Oh, my goodness. AT&T. Loading the chart. And there we go. Come on. It's getting there. I almost feel bad. Wow. Interesting. That's quite a bit. I don't want to see that much. I don't know how well you guys can see that. Can you guys see that okay? Spoof more. Ready to be used. Sorry, not quite sure. The Daily Gamer. Hey, Goofy. Goofy. Oh, well, not quite sure what all that means, but alrighty. While we're still waiting for Thinkorswim to upload. Well, not really a whole heck of a lot to chat about while we're just sitting here waiting. Hey, KK, what's happening? 7DBJ. What does that mean anyway? Why are you calling this lovely, sir? It's Goofy. I have no idea. Why are you calling it Goofy? How do you even pronounce that? Zoima? Ham radio call sign. There you go, KK70. I used to do that ham radio. Oh my God. Back in the 70s, I used to do that ham radio. KD, KZDX. This is Papa Oscar Tango. Wait. It's Papa Oscar Sierra Alpha. Something. Oh, I forget. So long ago. Still waiting to upload. Installing updates. Damn. Well, so he's trying to be rude to you. Oh, well, that's not nice, trying to be rude. Little one, it's absolutely lovely. And crumpets and tea, perhaps. Coffee? All right. Do you want to allow public or private network access? No. All right, so let's try this for a fourth time. Continue. Uploading updates. Let's see if that one worked. Come on. The weekends are always tough because Thinkorswim goes through, what do you call it? Installing updates and then updating everything, and then it's very challenging to see what is actually going on. So let's start going live. That way everyone can actually see the difficulties it is. All right, and now the end is near, and so I face the final curtain. All right. Account roll or strategy roll, blah, 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 blah. Installing updates. It's getting there. So, I bought 100 shares of Ford on Friday. Cool, Antoine. Ooh, no one finding viewers. Raymond, how are you today? Michael. Dividend Stock Talk is here. Cool beans. I love it when I show up for my own shows. Wow, this dude's got 25,000 followers. Pretending to be me. Okay, I'm going to see how he spelled his. Dividend Stock Talk. Wow, interesting. Okay. Who do we got here? Peter, Davey, Sigma. What's happening? Jeff. Uh-oh. Almost ready. Bo's here. Sasha. Crystal. Progress. Arnold. Bought 100 shares on Ford. Okay, we're going to take a look at Ford. Ford will be the very first one we take a look at today. And I don't have my damn pen. There it is. My pen. Ford. Ford will be the very first one we'll look at today. I like this channel. I don't know what stocks mean. Oh, boy. This feed looks good. Thank you, Steve. Hey, Steve, how are you today? How'd things go for you? How did it end up on the weekend? I saw the last 15 to 20 minutes. Riley jumped out. We're going to take a look at Riley also today. That thing jumped up really good on Friday. Okay. James, how you doing? Sigma. Jake. Just some tree guy. Anthony Ebersol. Okay. You can get him in trouble for copying. Nah, unfortunately you can't. Because, see, with a lot of channels, they won't prosecute or they won't do anything about somebody stealing your content and reusing it, which I find kind of strange. But it is what it is. Hey, Doc's here. Take a look. KG wants to take a look at Pfizer, Bristol Myers Squibb, and Halliburton. Pfizer, PFE. Here we go. PFE, Halliburton, and BMY. BMY. All righty. TLT looks good. What the heck is TLT? TLT. We'll take a gander at that one also. That's illegal. So unfortunately, it's not illegal here. You know, it is what it is. Sweet Jones. Can you explain exactly what is considered a trade? All right, one covered call considered a trade or 100 trades. Oh, no, just one. Anytime you buy one stock or sell one stock or buy one option or sell one option, that is considered a trade. Okay? Little ones in trouble. How old are y'all? The boot is unprofessional to have. Okay. Tax. Okay. Piercings, etc. The boot has very good at explaining things. Politics are just like the DR game. It's just upside down. Okay. I'm saying the guy who is copying you is illegal and can't copy your name. True, but they take the name and they add a little twist to it. Maybe a space, maybe a comma, maybe an S or an I where it doesn't belong, something. Say Jeff wants to take a look at Macy's, Hormel, Hormel, MRK. I saw a couple more. Kohl's, Harley Davidson, and Hewlett Packard. Kohl's, Harley Davidson, and Hewlett Packard, HPQ. Okay. Oh, Jeff also wants to look at Walgreens. All right. That's a good number to go off with, start out with. All right. So, about time. We are online with Think or Swim. So, here we go. Let's get right where I want it to be, right there. That works out nicely. And go up just a tiny bit. I hate when that happens. Let's try this one more time. There we go. All right. So let's get out of here. All right to there. Whoops. Nope. Right to there. Right to there. Right to here. All right. Well, it took me long enough to get it figured out. Do Harley still make bikes? Yes, Harley Davidson still makes bikes. Me too. Antoine wants to take a look at Walgreens. We're going to take a look at Walgreens. NJR. We'll take a gander at that one also. What's up? Didette. How are you today? Okay, so I'm going to pause all the questions. Okay, so I'm going to stop all the questions now. I am going to answer every single question before the night is over. So please only submit a question once. Just once. I will get to every single question. Also, if you're going to submit a stock for me to take a look at and give you my opinion, that's all it is, just opinion. It's not a suggestion. It's not a recommendation. Okay? It's just my opinion. The only thing I want you to get from this show, basically, is, number one, does it make sense? That's it. If it doesn't make sense to you, don't do it. Now, let me get a few things straightened out just before we get started. First of all, my name is James. This is Dividend Stock Talk, where I invest in dividend stocks for weekly cash flow. Now, what I'm looking for, simple, safe, predictable, consistent 1% per week. That's what I'm looking for. How do I do that? Well, I look at pre-qualified dividend stocks. Now, those are companies that have consistently increased their dividends to their shareholders, meaning these companies have made a profit and take those profits and pass it along to the investors. That is us. Once we buy a stock, we are owners, part owners, maybe a small part, but still, if you own a share of a company, you own a small portion of that company. The more shares you own, the more of the company you own. And if the company is profitable, you get to enjoy some of those profits in the form of a dividend check. They take all the profits, they divvy them up where they're going, and they take some and they pass it along to the shareholders. So those are the only companies I want to look at. If it doesn't have a dividend, we're just wasting our time looking at it because it's going to be a no. Okay? Now, I understand completely. There are a whole bunch of different trading strategies out there. There's lots of different ways to make money in the stock market. I have a very small niche, very small, and I am perfectly okay with it. Okay? I'm perfectly okay getting 1% every single week on my portfolio. I'm 61 years old, going to be 62, okay? I'm retired. I do not want to have to go to work. Okay? I don't want to go back to work and have to work just to pay the bills. No, I don't want to do that. I've been working since 1973. I think I'm entitled to have a break and retire. All right, that being said, simple, safe, predictable, consistent, and no way for me to lose. Now, this year, I'm trying to go the whole year with 0 losses. So let's see if I can do it. Now, we're just getting started. I'm starting a little late, so I'll probably go a little bit later tonight. I'll actually, if we can get over 200 people by, let's say 11:30, 12 o'clock, I'll stay on later. Okay, so like, share, comment, all that kind of nice, neat, fun stuff. And we'll stay longer as long as you have good quality questions. Now, I keep forgetting where I am every once in a while. That happens when you get older. When you get older, you have a tendency to forget things, so you write them down. Yep, I do. I write shit down because I'm getting old. The really sad part about it is once in a while, I forget where I write stuff down. Got some questions over here. Hi, from Canada. How are you doing today? I have a question. What is the cheapest stock, and are all stocks the same price if you buy the same amount? No, absolutely not. Stocks can be anywhere from 1/100th of a penny to $4,000 or $5,000 per share. Now, the company, there's hundreds and hundreds. Actually, there's thousands of companies out there which you can invest in. Now, they do run anywhere from 1/10 of a penny all the way up into a couple of $1,000s. However, the only companies I want to look at, and I'm going to explain to you why, are those companies that are consistently profitable. Now, this boggles my mind for some strange reason. Now, for me, I'm pretty strict on where I put my money because I'm retired. I don't want to go back to work. Mitch, the other YouTube channel is frozen. Damn it. Well, let's check it out. Thank you for that, Mitch. Okay, it is frozen. Damn it. Okay, that part's not frozen, but the video camera is frozen. So let's change that. Let's get rid of that one. Just give me 1 second. Technical difficulties. Do you sure you want to remove again? Yep. Get rid of that one. Put in another one. Video capture device. There we go. And I want this one right there. There it is. Okay. And let's shrink it down a little bit. Right to about there. Fade and retreat. And now it's working. Okay, great. So, that being said, okay, only dividend stocks. And these are companies that have consistently increased their profits. Now, what do I mean by that? Well, if a company is not profitable, why would you invest your hard-earned money into it? I mean, that doesn't make any sense to me. If the company's not profitable, why would I put my money there? You remind me of Robin Williams, the actor. Your enthusiasm. Well, thank you very much for that. I'm going to take that as a compliment. So, if a company is profitable, they're going to take the profits and they're going to share them with the investors. Now, I look, me personally, for 2 decades of profitability. That means their profits or their dividends consistently increase. Higher, 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 higher every single year. I do not like those companies that profits, 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 down. Profits, profits, down. Profits, profit, down. No. It's consistently higher and higher is what I'm looking for. Now, we looked last week. There was 9,948 different companies that you can join from. Number might not be particularly... You know what? For the fun of it, we got some time, so let's take a look. Let's take a quick gander, and that way we can say, hey, we looked, and this is what the number is. Okay, Yahoo Finance. I love Yahoo Finance. So let's go to FinViz. Now, FinViz is short for Financial Visualizations, and it basically gives me, here it is right here, FinViz. It gives me a way to figure out how many different stocks are out there. But there's only one number I really want to see, and that is this number right here. 9,926 different companies. Under here are all the different companies. So you can go up here and put any parameter you want to put in. Target prices, volume, dividends, the index, the exchange, the price, the earnings, all that kind of stuff. Anything you want. Gives you detailed information of 9,926 different companies. Well, I only want companies that have dividends. So let's do this. And positive dividends. Okay. 5,738. So out of the 9,900 companies, there's only 5,700 that are giving dividends and are profitable. Well, those are the only ones I want to look at. But this FinViz does not give me the amount of years that they're consistently profitable. So for that, let's get out of this. Let's get out of that. Well, now that's interesting. What the hell happened there? Well, we'll have to wait for that one to come back up. All right. That gives me an idea of how many companies are out there. 9,900, 5,700 actually pay dividends. So it doesn't give me any idea of how consistently profitable they are. For that, I actually have to go into the data stream. Now, you really should, let's go to the, no, we already tried that one. We really should, if you're going to be investing in the stock market, you really should, at your little fingertips, have access to financial data. High, low, open, close, how often do they increase their dividends, are they consistently profitable, blah, blah, blah. All that kind of nice information for you to invest your money. So always make sure you're buying a good company at a good price, blah, blah, blah. We're going to get to that a little bit later on. We're going to go through a bunch of samples. I stopped all the questions, so I don't see any questions whatsoever. And HRL's on the list. AMD, Advanced Micro Devices. All right, we're going to pause questions. We're going to do those in a little bit. All right, so I'm pausing both sets of questions. Okay, so hold all your questions until after we go through the list. Now, you guys gave me about 15 to take a look at. It doesn't take very long for me, the strategy that I use. You're going to see how I do it. It is simple, it is safe, it's predictable. Now, for the most part, I only do companies that are consistently profitable. So let's get started. The very first one on the list today is going to be Ford. Now, I am very methodical. A plus B equals C, or 1, 2, 3 equals 4, whatever you want to call it, but one step at a time. Every time I look at a stock, it's always one step at a time. First thing I always want to look at is the 1-year chart. The 1-year chart gives me an idea of where the high of the year, the low of the year, where was it a year ago, where is it today, and what does it normally do? Okay, sideways up, down, sideways down. Right here, we're at 928 at this moment. This is Ford. This is the 1-year chart. I actually have some Ford, so let's take a look at the numbers. Now, what do I mean by the numbers? Well, simple. What am I going to be buying it for? Now, I do a simple trading strategy. Now, this trading strategy I'm going to show you, I created for my 9-year-old daughter. Let me see if this is back up again and we can take a look. Okay, it's my website. We go over to YouTube. Now I'm going to show you who I created this trading strategy for. Now, I've been trading for 20 years. My first 5 years weren't that great. Okay, both of those are working. Videos right there. And we want to look at to the oldest. Now, I'm going to show you my 9-year-old daughter when she used to trade.
Website called Thingy, which my dad didn't let me calling it that, but I do. Hi, I'm JC, and me as you being part of my internet website called Thingy, which my dad didn't let me calling it that, but I do. Being part of that, you're going to be getting weekly lists.
She's about the same size as me. Look at that.
I'll be trading, and every month you'll be getting 4 lists of stocks that you can choose from that help you.
Right, so that's JC, my daughter. All right, and here's me 15 years ago.
There's 21 days in the month. What does that mean? That means every single day you buy a different stock. Every single day there's a different company paying out dividends. Anyway, seriously. I'm picking just one company per month.
Okay, now that always makes me laugh. That was me 15 years ago. So my daughter was 9 years old. She climbed up my lap and said, Daddy, what are you doing? Can you teach me? So to teach a 9-year-old how to trade stocks, it had to be simple. It had to be safe, predictable, consistent, and no way for her to lose. So to teach her, I had 5 different strategies. One strategy, 5 different rules. Rule number 1 is never buy something you don't understand. If you don't want to buy it and own it, then don't buy it. It's that simple. If you don't want to hold it for the rest of your life, then don't buy it. Because when you buy a stock, you're putting your hard-earned money, you're giving it to people you don't know and saying, here, I trust you with my money. Okay, so I always want to make sure the company's consistently profitable, point blank. So number 1, never buy something you don't understand. Number 2, never sell at a loss. It kind of defeats the purpose, don't you think? Why would I buy something and sell it for less than what I paid for it? In all actuality, most people buy stocks and hold them until they're ready to sell them 5, 10, 15, 20 years down the line and let it grow, and grow. Yeah, that's normally. But see, here I do things a little bit differently because I'm looking for cash flow. I'm not looking for capital appreciation, and there is a huge difference between the two. If you're looking for capital appreciation, meaning if you buy the stock and you just wait and wait and wait for it to go higher and higher and higher, yeah, that's capital appreciation. You're in the wrong place. That's not what I do here. I have no interest whatsoever, and that's strange. No interest whatsoever on a stock, buying it low and as it goes higher and higher and higher. Yeah, no, that's not what I'm looking for. Simple, safe, predictable, consistent 1% per week. So rule 1, never buy something you don't understand. Rule 2, never settle a loss. Rule 3, we just talked about this a little while ago, but rule 3 is consistency in profitability. Is the company consistently profitable? Are they making more money this quarter than they made last quarter, than they made the quarter before, the year before, so on and so forth? Now, like I said, I like 2 decades, 20 years of consistent profitability. So all these hot companies you see in the news now or here on TV, yeah, I don't buy any of that. Sorry. If that's what you're looking for, if you want to know about NVIDIA, hell no. If you want to know about, what is that other one? VOO, NSCD, SMCI, any company that's less than 25 years old, no. Sorry. I don't care how hot and wonderful you think they are. I have no interest. Okay? 61 years old, I'm retired. I have no clue or no care about what is coming up next. I want to see companies that have been around for 50 years, 60 years, 100 years, that has built the American economy, that has seen all the crap over the last 100 years. World War I, World War II, Korea, Vietnam, the Great Depression, the stock market crash of, here you're going to like this one, stock market crash of 1929, 87, 2000, 2008, 2021, all these stock market crashes. These companies have seen it all and consistently, continuously increase their profits. Those are the only companies I want. And if I can get 1% every single week from investing in these companies in a safe, simple strategy, well, hell yeah. Why the hell not? All right. That being said, let's get started. First one on the list is going to be Ford. First thing I want to look at, 5 different things. High, low, where was it, where is it? What direction is it going? Up, down, sideways, down, sideways. We're now at 928. What am I buying it for? Well, first thing tomorrow morning, well, here's the number right here, 933. Now, I'm doing a covered call. A covered call is one of the safest strategies. One of the safest strategies. The safest is just buying the stock. That's safe because you're just buying a company that's been around for over 100 years. It's safe, relatively. Okay? Could it disappear overnight? Yeah, but I don't think so. If you really think Ford is going to disappear overnight, then don't buy it. Simple. Okay? Just don't do it. All right. Ford's currently at 933. The closest strike price. If you don't understand what a covered call is, like I said, it's a simple, safe strategy. There are literally hundreds of videos that will show you online on YouTube, Vimeo, or whatever streaming site you use. It'll explain to you what a covered call is. Basically, you're buying a stock, 100 shares, and then you're selling them to someone else at a certain price by a certain date. Kind of like layaway. You know, hey, I want to buy these, but I want to give you a little bit of money here. Hold it for me. I'll come back and pay for it eventually. Kind of like the same thing. But the stock, interesting thing. I can buy the stock tomorrow morning at 933. And then I want to turn around. I got 2 choices. I can sell it for 885 or the 935. Now Ford, you'll find this once in a while where the strike prices don't really look like they make sense. Okay? 735, 785, 835, 885. What is that? All right, so the closest price to the purchase price. Okay, this is the purchase price. Closest one could be the 933. Now look at what it's selling for. Okay, bid, ask. Bid is the buy. It's the buying column. Ask is the selling column. This is the column we want to look at. If I'm buying the stock, the closest strike price, which means the agreed price, is 10 cents. Now, it doesn't sound like a lot, but let's understand something. A covered call or stock options, okay? Call options, put options. A stock option and a put option are legal binding contracts. Okay, 4 things need to occur in a legal binding contract. Beginning date, ending date, consideration, that's money, and then meeting of the minds, an agreement. Okay, you're buying a stock, Ford, at a certain price, 935, that's the strike price, by a certain date, 28 February. 7 March, 14 March, 21 March, 28 March, 4 April, 17 April, so on and so forth. This is called a weekly optionable stock. Every week there's another option. So the one that I'm looking at the moment, 28 February, that's this coming Friday. So the contract is I'm buying the stock, which means I have the product. I'm selling it to someone else, in stock option buyer. Who they are, I really don't care. We never know who we're selling to. We're selling to a market maker. He's a person behind the screen who buys and sells. That's his job. He arranges between millions of people out there, whoever logs onto his screen, say, hey, I want to buy this. Hey, I want to sell this. He puts it all together. And this is the prices he says. Okay? So, if I buy it at 933, I sell it at 935, I collect this right here, and this is what I'm looking for. That has to be, for me, has to be more than 1%. Well, at $9.35, 1% is 9 cents, 9.3 cents, okay? But This is getting 10 cents, which is more than 1%. Simple, safe, predictable, 1% per week. That's what I'm looking for. So let's get back to the rules again. Never buy something you don't understand. Make sure the company never sell at a loss. Make sure the company is consistently profitable. 4, weekly options only. I cannot get weekly cash flow from a company that does not have weekly options. Now, you can find who has weekly options in CBOE, Chicago Board of Options Exchange, CBOE.com. I'll tell you every single company that has weekly options. And then rule number 5, make sure the numbers work. Okay, what am I buying it for? What am I selling it for? What am I collecting? And is that more than 1%? If it's a yes, great. That's half the equation. The other half of the equation is in the chart. The chart's going to tell me when is the right time to buy. Well, for me, I don't ever want to buy at the high because it's never been higher than that. That's the highest it's ever been. What makes me think just because I'm buying it, it's going to go over 15? Well, right now it's at 928. Well, why? No, I don't buy it at the high. Sorry. And I don't buy it at the absolute bottom. Because to me, the absolute bottom is exactly where the bottom is. It sounds weird. The bottom is where the bottom is. Well, how do we can tell? Well, you can tell. Let me zoom into this for a second, and you can basically tell where the bottom is. Okay? There's the lowest one right there. Argue all you want. The lowest one is right there. The highest one is right there. The high, the low. Okay? I look for 5 things. High, low, where was it, where is it, and what direction is it flowing? Down, up, now it's going sideways. Okay, fine, I understand that. So now I got to figure out where is it going next. Well, it looks, let's go into the last 30 days. Last 30 days would be right there. Okay, so this is the last 30 days. Well, the last 4 weeks tells me where the stock's normally going to go. So here's where it was. Jumps up, comes down, now it's going sideways. Okay, fine. Now, I'm okay with buying it here because look at all this space between the 30-day bottom and the 30-day high. So it looks as if it should be going back up this way. Is it guaranteed? No. There's only 3 guarantees in life. Death, taxes, and disappointment. I came up with that myself. I'm rather proud of that one. Death, taxes, and disappointment. So anyway, Ford looks good. But there's one more thing that's missing. And what does Ford normally do this time of year? Now for that, I use one more chart. And that is called the seasonality chart. Certain stocks move strategically based on the time of year. Well, the time of year we're in right now is winter. Winter, spring, summer, fall. Okay, it's all the same. Winter, spring, summer, fall, winter, spring, summer, fall, over and over and over again. Now, stocks react differently in the spring as they do in the winter, as they do in the summer, as they do in the fall. The beginning of the year, this is what it looks like. Ford usually drops all the way until May. There's a little bit of a bump up, then drops back down again, then it shoots up again. Okay, there could be some logic to it. Okay, at the beginning of the year, people don't want to buy new cars. And it drops, the middle of May. What happens in May? Well, kids usually graduate. Kids get out of school. So then we start buying cars for all those graduates, and the stock goes up. And then nothing happens all summer. And then what happens in October? Well, people stop buying cars as Christmas presents. And then she starts going back up again. Well, that's lovely. But anyway, this is just seasonality, gives us an idea of how the stock normally moves throughout the year. Now, this is 10 years worth of data. The blue line represents just this year. Okay, so far the stock didn't do a whole heck of a lot this year so far. But here's the rest of the year right here. What does it normally do? Now, if you see something, like take a look right here. Now, that is a nice movement. The second week of May to the second week of June. A nice upward trend. year after year after year. Now that's 10 years of data. That's 2015, 2016, 2017, 18, 19, so on and so forth. Is it guaranteed? No. It just gives us an idea of what it normally does year after year after year. Now, Ford's been around for over 100 years. I got no problem whatsoever buying Ford, especially where it is now. There's a few other things you may not know about Ford. All right, let's go back to where we were. Here we go. Go all the way this way. Now, Ford, at this moment in time, is at $9.33. That is the market value. That's what we, the people, think it's worth. Is that the actual value of the company? Nope. The actual value, the actual value of the company is what is called the book value. The book value is if you liquidated everything. What do they own? What do they owe? What are their assets? What are their liabilities? Well, the book value for Ford, as I believe it's at 12 or 13 bucks. Well, I can buy it at $9.33, but it's worth 12 to 15 bucks because that's the book value. Okay, the stock price is just the public's perception of the value. Give you a perfect example. All right, Ford's over 100 years old. It's got a book value of 12 to 15. Okay, fine. Stock price, $9.33. General Motors. Bring it up real quick. General Motors, $47.11. $47.11. That is the current stock price. However, the book value for General Motors is over $65 per share. And it's over 100 years old. And the dividend's halfway decent. So let's do a little flip side. Okay. So NVIDIA, it's a hot stock. A new shiny object. Great. It's about $130 a share. But the book value is only $2.74, somewhere in that area. $2.74. That's the book value. That's the actual value of the company. The dividend on NVIDIA, 4 cents per year, which is 1 cent per quarter. So every dividend you collect on NVIDIA is 1 penny. What the hell good is that? Well, let's look at Palantir. Well, Palantir also has a low book value and a high stock price and no dividends. So what are you buying? Why are you buying it? Does it make sense? Well, for me, I don't do Palantir. I don't do NVIDIA. There's a lot of stocks I don't do only because they either have no dividends or they're not old enough. Now, you guys can do whatever you want. I'm just showing you what I do. I'm not giving any tips. I'm not giving any recommendations. I'm just showing you. Okay, General Motors. Look at, here's the high. Let's open it up and look at General Motors just for the fun of it because we got it here. Okay, here's the high. Here's the low. Here's where it was. Here's where it is. Look at the direction. Up, down, up, down, up, down. Okay. Now, that gives you a rough idea of what it's doing throughout the year. But I wouldn't do this one only because, did you see this right here? That is a new 30-day bottom. Now, there is no indication whatsoever if this is the bottom because there's nothing to the right to compare it to. Now, over here, you can tell because it was here, then it dropped, now it's back up. It was here, now it dropped, now it went back up. Here, we're at the bottom. So which means tomorrow could be lower. Tomorrow could be higher. It's a 50-50 shot. Higher, lower. We won't know until tomorrow. Okay? But what does General Motors usually do this time of year? Well, General Motors, it probably has a similar chart to Ford. Okay? And it does. Okay? It goes down for the first quarter, goes up in the second to third quarter. You know, odds and probabilities. If nothing is guaranteed, well, there are a few guarantees in life: death, taxes, and disappointment. All right, let's get back to where we were. So that's Ford. I like it. Let's actually do some back to Ford. Now, I usually go through a few examples. Okay, so here's Ford. Okay, down, up, down. Now she should be going back up. See? High, low. Now she should be going back up. All right, hypothetically speaking. Because at 9:33, let's do a covered call at the 9:35. So let's get rid of this. So I'm going to go through a sample, and you guys follow along, see if it makes sense. Covered stock. Okay, the 9:35 right there. I only got, let's do all 10. Why not? 10 contracts. Okay, here it is. By 10. Okay, I usually show you 1, but now I'm going to show you 10 because it's really not that difficult, to figure it out, between 1 and 10. By 10 covered calls of Ford, 28 February, meaning the option expires on Friday. However, I still own the stock. I own the stock, which means I can do whatever I want with it. So if on Friday it's $9.35 or higher, well, somebody will buy all those shares from me and I get all my money back, and I get to do the same thing again next Monday. Well, next Monday's coming anyway, so why not take advantage of it? I mean, there's nothing you can do about the passage of time. You can hook your wagon to it and take it for a ride and go along for the ride. You can do whatever you want, but you cannot stop it from coming. That's like eventually you are going to retire. Where's the money going to come from? Now, are you going to do the investing yourself, or are you going to pass it off to someone else and take whatever it is they give you? Because trust me on this one, whoever does the investing for you is not going to have your main interest at the top of their list. I mean, think about it. Do you honestly think your broker has your best interest in mind, or do you think he has his family's interest in mind? His paycheck, his or her livelihood, whichever. Okay? So, let's read it again. By 10 covered calls of 4. Let's change it back to 1. It's I'm so used to doing 1 because it's easier for some people to realize, to do the math on their head. All right, here it is. By 1 covered call of Ford. Okay, the weeklies. That's, it expires every week, which means I own the stock and I'm selling somebody the rights to buy it from me for the exact same price I just paid for it. Well, it sounds kind of silly if you think about it. If I'm buying it at $9.28, okay, that's the current price right there, and I'm selling it for $9.35, all right, I make a few dollars. Not a lot, but look what I'm collecting. I'm collecting $13.50. Now, you're probably thinking to yourself, that's chump change. Well, is it? Do the math. Do all of the math. Okay, so let's break up the calculator. So for this 1 contract, I'm picking up right there. See it? $13.50. And what is my profit? The way to figure out a profit when you buy something is you take the profit and you divide it by how much money you have invested into it. Well, that's $922. All right, so $13.50 divided by 922, that comes to a grand total of 1.4% for 1 week. What does that mean, 1.4% for 1 week? Well, multiply that by 52, because whether you agree with me or not, there are 52 weeks in the year. And 52 weeks at 1.4% per week, that's got to be at least 76%. Now, at 76%, you can double your money, 12, 13 months? Because whether you want to admit it or not, okay, whether you want to agree with me or not, okay, we all have the same amount of time every day, 24 hours in a day. How do you spend your time? Okay, the most valuable commodity you have is your time. Money comes and goes. Health comes and goes. Everything comes and goes. But what doesn't come and go? Time. Once it's gone, it's gone. All right, so let's keep on going. So that is 1.4% for the week if you like Ford. Now, if it's above 935 come Friday, I'll get all my money back. Now, see, investing, the money's got to go somewhere. It's either going to sit there and collect interest. If it's a high yield savings account, what do you get? 4%. If you put it in government T-bills, what do you get? 5%. If you put it in CDs, what do you get? 2 or 3%. If you put it into an investment, what do you call it? One of those IRA type scenarios and giving someone else, who knows what you're going to get. If you take responsibility for your own money, you are in control. Now, I'm getting a little bit of, what do you call it? Filibustering. Just keep talking for the sake of talking. Let's stop all the small talk and let's just go through all the stocks. Because I'm sure you guys want to see what the numbers look like with all these companies you gave me. That's Ford. I like that one. It makes sense. All right, back to the beginning and back to here. Next on the list, I'm going to put a little check mark next to Ford. I like that one. Riley. Now, I do own some Riley, and Riley was rather interesting. They had the bottom of the year last week. R-I-L-Y. Here we go. Here we go. The high of the low. Where was it? Where is it? What direction is it going? Up, down, sideways. $3.39 is the current price at this moment in time. So, $3.39 to $3.50 is the closest, and that's going for 40 cents. That's crazy. That's a 10%. Now, that's probably not going to be the same tomorrow morning when the market opens. Because if the market opens with this number, hell yeah, I'm buying some more. Dollar cost averaging and getting 40 cents on a 30. Okay, yeah, you got to see these numbers because this is just not real. All right, a year ago at $15.99. The high of the year, $40. The low of the year, right there. Friday, $2.73. Wow. Okay. High, low. Where was it? Where is it? Look at this. Sideways, down. Now, Friday, she had a nice jump to the upside. All right. Now, like I said, I do own a bunch of Riley. All right. Let's do a covered call on this one and see how crazy the numbers are. But I'm going to let you know now, these numbers aren't going to be the same like this tomorrow morning. Okay? The $3.50 stock price, 40-cent premium on the stock option? Yeah, no. All right, so let's do a calculator real quick. Okay, 40 cents. Okay. Yeah. 40 cents right there. Let me isolate it right here. Okay. 40 cents on the $3.50. Okay, so let's take a look. And we're going to divide that by the current price, $3.39, 3.39, and that gives a grand total of 11.8%. Yeah, I don't see those numbers going tomorrow morning, but I'm going to check first thing in the morning. I'm going to take a look at that one and see if it is. But more than likely, the market maker will probably change it. So just wait for the market to open. Next on the list. Yeah, just wait till the market to open before you actually do anything, especially with a trade like that. All right. Next on the list is going to be Pfizer. PFE, Pfizer. Okay, 5 things. You ready? High, low. Where was it? Where is it? Look at this. Down, up, down, up, down, up. 26.42 to 26.50s, 32 cents. That's more than 1%. That makes sense. And I like Pfizer. Okay, Pfizer is a stock on my personal list. The funny thing is, it seems everybody who threw a stock at me this evening has been here before and knows these are the companies that I like. So they're just throwing my shit back at me. So yeah, I like Pfizer. There's the high of the year, which was the end of July, 31.56. Here's the bottom right here. The middle of November, and that was 24.48. Well, look at the last 30 days. Now, why do I always keep coming back to the last 30 days? Well, a year ago doesn't really make sense because a year ago was basically a year ago. Are the numbers the same? Not even close. The numbers change every single day. So what is the most accurate number you have? Well, the most accurate number you have would be yesterday. Well, that's Friday. That's right here. Okay, and before that would be last week. Well, look at the movement last week. A nice upward movement. Well, look at 2 weeks before that. Downward movement. So 2 weeks ago, she was way up here at the high. Then she drops, finds the bottom right there, and now she's going back up again. So where do you think, hypothetically, it should be going? Hypothetically, it should be continuing going up until it gets to the 30-day high. Because remember, you can only have one 30-day high, and you can only have one 30-day bottom. Well, there it is right there. The high, the low, and look at the direction. Up, down, up. Well, it has more space here to go. So I'm going to write that one down also. So that's 3 picks so far. Let's do a quick covered call. No, let's not. Let's just move to the next one. The next one would be Halliburton. Now, I do own some Halliburton, just to let you know. Remember, 5 things. It should take you 2 or 3 seconds, okay? High, low, was, is, direction up, down, up, down, up, down, up. 26.95 to 27 is going for 17 cents. Nope. It's not 1%. Isn't that simple? Not 1%. So no to Halliburton. Bristol Myers Squibb, BMY. Here you go. Quick look. High, low, was, is, direction, down, up, down, up, down, up, 55. 55.83 to 56 is 61. That's more than 1%. That works for me. So let's check it out. A year ago, 51, bottomed out in July at 39.18. Topped out a couple of weeks ago. Right there is the high of the year, 61.16. That was on the 27th. Well, here's the last 30 days. The last 30 days was the high of the year right there. We're at 58, jumps to 61, drops down to 54. 1, 2, 3. Look at this. 4 days to the upside. You can't argue that. High, low. It's going up. Okay, at 56, 61 cents a share. That's more than 1%. Well, I'm going to write that one down. Next, TLT. What the heck is TLT? iShares. Why am I looking at iShares? Okay. Now, for the fun of it, let's go to, this is the first time we're doing this one. We're into Yahoo Finance. I don't want to see this. I don't want to see this either. Here we go. Nope, I don't want to see that either. Yeah, that's what I want to see right there. Historical data. And we want to look at the historical data. Why am I want to look at the historical data? Come on. See right over here? Summary, research, historical data. TLT. All right, so TLT history. Here we go. 89.61. That's the current price for TLT. Now, what am I looking for here? Well, here, I want to look at the historical prices. See that right there? Historical prices. Why? Well, because I want to see how consistently they increase their dividends. Because I've never really heard of TLT. And there's a reason for that. Okay, I want the maximum. Okay, so June 2002 to February 2025. Wait, let's want to wait. Okay, so here are the dividends right here. Now let's watch them as we scroll down because it actually goes backwards. See right here, February 25, December 24, December 24, November 24, October 24, September 24, so on and so forth. As it goes down, these numbers should get lower and lower. 31, 35, 33, 31. Yeah, I'm going to have about an issue here. So why are we having an issue? Okay, doesn't look that bad. I have seen worse, but I'm not seeing any big number changes. All right, so I want to go all the way back to 2005 because 2005 will give me 20 years. So let's go to 2005. All right, here. So in 2005, we're going to go through the dividends, and hypothetically speaking, they should get higher and higher and higher each year, right? Okay, so 2005, 35. And then it goes to 28. Hold on a second. From 35 to 28 is a 7-cent drop. I know it doesn't sound like much, but 7 cents out of 35, that's 20%. You got a 20% drop here. No, that's not good. All right, so 35, 28, 33, 33, 35, 33, backwards again. 35, 33, backwards again. 36, 40. Okay, that's just for 2005. Okay, it goes from 40 to 39. That's backwards. 38, backwards. 32, backwards. 32, 33, 33, 33, 34, 34, 35. Okay. Do you see how it goes up and then down, then up and then down? Okay, so 35, 34, 30, backwards, 36, 34, backwards, 33, backwards, 32, backwards, 34. Look at the numbers right here. 35, 34, backwards, 30, backwards, 36, 34, backwards, 33, backwards, 32, backwards. No, that's not consistently increasing. Consistently increasing is 1, 2, 5, 7, 9, 10, 13, 15, so on and so forth. Not up, down, up, down. No, this one, no. Sorry. For the fun of it, let's go to iShares and see what the rate of return, the yield is. Okay, over in summary, see, right over here to the left-hand side. Okay, we're going to scroll back here a little bit. Is it going to give me the number? Okay, the yield, 4.2%. Now, I'm not quite sure, but now, if I'm making 1% every single week, and there's 52 weeks in a year, well, simple interest would be 52. This company here is only 4.2. So here's a question you got to ask yourself. Okay, 1% a week is going to take you 10 minutes a day, 10 to 15. Once you get the hang of it, it should take you a lot less time. Oh, we got some more people over here. Sterling, what's happening? Gape Luck, what's happening to you too? Araspa. Okay, so the thing is, okay, Karakum wants to take a look at Wally World, WMT. We'll take a look at that one. Hold tight. So you need to ask yourself the question, do you want to get 4.2%? You know, buy it, leave it alone, you get 4.2%. Or do you want to buy something, do a 5 or 10 minutes of work every single day, take a look at it, move it around, that kind of fun stuff? It's going to take you 5 or 10 minutes a day. Now, is 5 or 10 minutes a day, is it okay if you're going to get 50 to 60% per year return? Well, for me, it's okay. I'm retired, so it's a different story for me. But for some of you guys out there still working, does it make sense? Okay, I have my portfolio. How much time does it take to look at your portfolio? Well, let me give you a quick little, what do you call it? Let's go here, here. Let's go here and then here. And hold on a second. Right. Let's get rid of this. Oh, no, we don't need to get rid of it. Let's go move it over to here. We're going to look at this. Here we go. So here's my portfolio. Here's everything that's in there. It's not a lot because I don't want to have to track a lot. But it's not that difficult. First one on the list, Foot Locker. So I put Foot Locker up here, FL. Okay. Here's where it is right there. Oh, it's going down. All right, is what it is. Where am I? Okay, I got 1,100 shares at 22. Okay, 1,100 shares at 22. It's at 18. So more than likely, I'm going to end up selling the 19s of the 1950s. So the 19s of the 1950s, 19 is giving me 15 cents, not quite 1%. I could do the 1850s, but that's too close for comfort for me. The 1950s, yeah, I'm bringing in some money. It's not a full 1%, but let's take a look at the other ones. Halliburton. We just talked about Halliburton, HAL. Okay, last couple of weeks. Well, look at this. It's in an upward trend at the moment. Halliburton. $29.82. I sold off the 26s. Push it out until March. Okay, not that big. Okay, you got to take a look at what does it mean. All right, here we go. Okay, where is your current position? How many shares do you own? How many different stocks do you own? And it takes a couple of seconds. Okay, where is it? Okay, high, low. Now it's going back up again. Makes sense. Now, do I like Halliburton? Well, yeah, I do. Do I plan on ever selling it? Not really, unless it hits my target. What's my target? Well, we already took a look at it. It's like 28. Well, right now it's at 26. 28's up here. But I can write a covered call every single week. And if I take all those stocks that I own, write a covered call every single week on each one of those, well, then I'm getting 1% every single week. Now, if I have $100,000 in my account, well, I'm looking to get $1,000 because $1,000 is 1% of 100,000. So I'm looking for 1% of whatever my account is. Okay, so if I got 50,000 into this, I want to get $500. That's what I want. Can I do it? Well, I have been doing it for the past 15 years. It's simple, it's safe, it's predictable, it's consistent, and I don't ever buy anything that I find to be questionable. Are they consistently profitable every year for at least 2 decades? Well, 99% of them are. Every once in a while, I'll buy something that's not really on my list, but it might be on Warren Buffett's list, or it might be another investor that I admire and wants me to take a look. Okay, it is what it is. Am I buying something that I agree with? Am I consistently looking at it? Now, I look at it twice a day. And there's a reason why I look at it twice a day. I look at it 5 or 10 minutes in the morning, well, because it's my money. It's my garden. I'm out there weeding and watering and taking care of my garden. It just happens to be a money garden. Okay. And then I'm looking at it at night with you guys. Now, normally, decades ago, well, years ago, I didn't do this. I just did the morning. I just opened up my account and said, all right, what did I buy? Where's it at? What's the next logical step so I don't lose any money and I consistently have something coming in? That's what I'm looking for. I got to stop talking and just keep on going. That's Halliburton. Didn't look that good, so I'm going to say no. And I'm also going to say no to TLT because they're not consistently profitable. You saw the numbers. They went up, they went down. They went up, they went down. Made no sense to me, so for me, it's going to be a no. All right, let's keep on going. Next, Macy's. Ooh, Macy's was my favorite stock last year. I made some nice money off of Macy's. Takes a couple of seconds. High, low, where was it? Where is it? Look at the movement. Up, down, sideways, up, down, up. It's at 15 at the moment. 15 is going for 30 cents. That's more than 2%. Here's the question. Do you know who Macy's is? Do you like the company? Is it worth $15 per share if you can get 2%? Well, 2% every week is over 100% per year. Look, you can do it this week. Okay? 15. The stock price is at 15. Okay? The strike price. If I buy it at 15, tomorrow morning. And I sell it to someone else at 15 tomorrow morning. Now remember, when I say sell it tomorrow morning, I'm selling the stock option against it. I'm buying the stock, so I own the stock. It's mine until I sell the stock. Okay, so I'm trying to sell it for the same amount of money I paid for it. 15, I sell it to someone else at 15, and I collect 31 cents a share. Now, 31 cents a share is more than 2%. 2% every single week is over 100% per year. You could double your money on a company that's over 100 years old. You cannot buy name recognition like this. That's something you have to earn. Okay, Macy's have been having a parade every single year, 3-4 times a year. Macy's, they shut down that street in New York 4 or 5 times a year just for Macy's so they can have a parade. Okay, so you cannot buy the name recognition. Does it make sense? Do you like Macy's? Do you like it at $15 a share? It's a yes/no question. Now, Macy's was one of my best performers last year. I made over 50% on Macy's, which means I bought it, I sold it, I bought it, I sold it, I bought it, I sold it over and over and over again. And I'd get anywhere between 1 and 3% every single week. Now, you can, for those of you that are new and don't know who I am, you can go to my website and it shows you all the trades I made last year. Come on, here we go. No Macy's. Oh, okay here. Macy's. That was week 47. Week 46, Macy's. Week 45, Macy's. Week 44, Macy's. Week 43, no Macy's. Week 42, no Macy's. Week 41, no Macy's. Week 40, nope. Week 39, week 38, Macy's. Week 37, Macy's. Week 36, Macy's. Week 35, Macy's. You can go all the way on the list. Every single week, every single one of my trades is on there. Okay, just click on any one of those. It pops up. Here's the timestamp. Do you know what the timestamp means? When did I buy it? When did I sell it? Right there, 8/26/24, 093246. Okay, 9:32 a.m. in 46 seconds. That's the timestamp when I sold this one. Now, red doesn't mean I'm losing. Red only means I sold. Okay, it comes in green and red. Let me show you another one. Some people say, that's red, that's bad. No, it's not. It just means I bought it and sold it. Greens mean I bought something. Red means I sold something. That's all it means. It's not green is good and red is bad. Nope, doesn't mean that at all. Okay? Wynn Resorts, Kohl's, Walgreens, MPW, Bitto, Kohl's, Bitto, Wynn. Okay. So it gives you every single trade I ever did last year. And this year is going to be the same thing. Okay, well, account 1, 2.6. Account 2, 2. Account 3, 4. Okay, so all the numbers. Everything is there for you to see. I don't hide anything. I actually show you exactly what I do. Now, I do have stuff for sale. I'm not going to try to sell anyone anything. Okay, I have a morning trading group. We actually do the trades every day live so you can see everything that I do and you have to watch. Now, it's not something that's supposed to be permanent. You're supposed to jump in, watch what I do, ask a bunch of questions. If it makes sense, well, then continue to do it until you get it. Once you get it, move on. It's not that difficult. Okay, let's get out of there. Back to where we were. All right, so that's Macy's. Let's quickly take a look. A year ago, Macy's is at 1937. The high of the year was the middle of March, 22. The bottom of the year, right there, the middle of February. The last 30 days, right here. Not that difficult to see. Up, down, up. It looks like she's coming down in that right now. Not a great time to jump into Macy's. I already own some, but that's okay. Next on the list, Hormel, HRL. HRL. Pretty easy to see. High, low, was, is. Look at the direction. Up, down, sideways, up, down, up. 44. No, I can't go by that number. The last trade was 29.65. Means that 30 is going for 60 cents. That's 2%. That's Hormel. Well, Hormel's been in business for over 100 years. They have consistently increased their profits for 5 decades. That means every single year it's higher and higher and higher and higher and higher. There's no up, down in the profits. Okay, to be a dividend king. Now, the lists I'm looking at, dividend kings. A dividend king is a company that has consistently increased its profits or increased its dividends for 5 decades. Hormel is one of them. And they've been in business for over 100 years. If I can get 1% on Hormel, hell yeah. I'll look at the chart first. Hold on a second. Sorry, I'm not used to talking so much. Sore on the throat. Look at the move. This is the movement for the year. Okay? Now, it just gives me an idea of where it is at the moment. Here's the high of the year. Here's the low of the year. Now it's going up. That's exactly where I want to buy it. As it's bouncing off the bottom. Well, the best part about it is it's bouncing off the low of the year. Not the week, not the quarter, not the month. The year. This is the bottom of the year. You can't get any lower than the bottom of the year. And how do you make money in the stock market? Buy low, sell high. You can't get any lower than that. Let's take a look. Hormel, a year ago, 30.48. The high of the year, 36.84. Now that was towards the end of May. Big drop. Now, the last 30 days, last 90 days, look at that. Okay, down, up, down, up. Not that difficult to figure out. Okay, so she's bouncing off the bottom here, going to the upside, 1, 2, 3 days going up. Look at all the space it has up here. Long way to go. A nice road to run. A nice wave. A nice wave. Ride out that wave. All right, anyway. 29.65, the 30, like I said, going for 60 cents a share. So for the fun of it, let's see what it looks like. Covered stock. The 30. Here's the 30 right there. Okay. 1. Right there at the market, right there. And here's what it sounds like. Buy 1 covered call of Hormel 100s. That's the weekly. 28 February 25. That's this coming Friday. That means the option that I'm going to sell. If I buy the stock, I'm going to let someone buy it from me. And I'm giving them 5 days to make up their mind. That's basically what you're doing. I'm buying the stock. It's Hormel. I like the company. I don't mind owning it for the rest of my life or however long it takes to hit my target. In this instance, my target is going to be $30 because right now the price is $29.65. There it is right there, the bid, $29.65. That's what I can buy it for. So if I buy it at $29.65, I sell somebody the rights to buy it from me at $30. So if it hits 30, great, they'll take it from me. If it doesn't hit 30, well, I still keep the profit and I still keep the shares, which is what I wanted to do anyway because I like Hormel. And then I'll do the exact same thing again next week. I'll sell the right for someone to buy it from me at 30 next week. If it doesn't hit the target, great. I'll keep that premium, which is a little more profit, and then I'll sell it to someone else the next week. And I will keep doing that every single week until I hit my target. What's my target? $30. Well, is $30 a good price for? Okay, hold on a second. We'll get back to that in a second. Let's continue with the example. Calculator. Here we go. All right. So maximum profit here is $100. And what is it costing me? $2,900. So $2,900. That comes to a grand total of, do you see this shit? 3.4% for 1 week. Do you have any idea what 3.4% for a week looks like? If you could do it every single week. You're probably not going to do it every week, but if you could, that's going to be close to, let's see if I can do this in my head real quick. Now, I'm not a math genius. I don't have a calculator in my head. This is just a rough guess. Okay, so I know 1% is 52% per year. 1.5% is somewhere around 75% per year. But 3.4, that should be 150, 165. Let's see, 165 equals 1.8. 1.18, sorry. That's 1.18.9. That's almost 1.2%. Sorry. That's 118%, 119%. That's a nice freaking return. If you can get 3% a week. Normally doesn't happen. Now, every once in a while, I will get a nice return like that. But it's Hormel. Does it make sense? That's always the number one. Number one question. So I'm going to write Hormel down. I'm going to put a little check mark next to it because it looked pretty freaking good to me. Hormel. Next on the list is Merck. Now, after I'm done with these, I am going to open up the questions again. Holy shit, I got 100 questions. Merck, M-R-K. Ooh, look at that one. High, low, was, is. Look at this. Sideways, down, now up. 89.50. The 90s going for 109. Well, that's a yes. What does Merck normally do this time of year? Well, that's not that glamorous. But look what she normally does. For the next couple of weeks, down a little bit, then she shoots up nicely. Well, that's nice if you like Merck. Now, we could do a nice 1% every single week until this big jump comes up. If it makes sense. And if you like Merck, M-R-K. That's what it always comes down to. Does it make sense? And do I like this company? Simple. All right, so Merck is a yeah. I'm going to write that one down. Yes. All right, let's go back to the chart and let's take a look at it. A year ago, 129. The high of the year was the end of June, and that was 134. Look at the last 30 days right there. Okay, here's your last 30 days. Look at this. 96 jumps up to 100. Big drop down to 81. 1, 2, 3, 4 days to the upside. Look at all that space. Hell yeah, I like Merck. I checked it off. Next on the list, Kohl's. Now, I do own some Kohl's, just in case you were wondering. Ooh, that don't look good. But look at there. Okay, high, low, was, is. Look at this. Down and then up. 12.05. The 12s are going for 30 cents. That's more than 2.5%. Well, yeah. But do you like Kohl's? Are you willing to buy? Because the bottom, look at the high of the year. Right? $30. Look at the low of the year. 12. That's more than a 50% drop. Okay? From the high of the year to where it is now, that's more than a 50% drop. Are you okay with that? Okay, because here's the bottom of the year right there. What do you think is going to happen next? Now, Kohl's, just like any other company, has a book value. What is the absolute bottom value for Kohl's? Back over to Yahoo Finance. Statistics. I like to look at the statistics because that tells me what the book value is. Right there. $34 a share. Well, the current price is $12. But the book value is all the inventory, all the assets, all the liabilities, the bottom line. If we liquidated, we're going to walk away with $34 a share. Well, that makes sense to me. That's why I keep investing in Kohl's. All right, next. All right, so here we are right here. 27.68 a year ago. We topped out the year at 29.50. Look at where we are now, the last 30 days. Right there. Okay, here's our 30-day high, 14. Our 30-day bottom, 1150. Okay, now she's at 1220. It's not that difficult to see. Down, up. Okay, it just makes sense. I'm going to write Kohl's. Harley Davidson. This one's a little fickle. Harley Davidson. Got a little bit of an issue with Harley Davidson. Yes, I own some, and I feel bad about owning some because the millennials and Gen Z apparently not buying Harley Davidsons. I have no idea why that is. Maybe they didn't have any iconic actors. You know, like we had Easy Rider. Remember that? Fonda, Nicholson, and who else was that? I don't know. Easy Rider. And then you had, there's a lot of good movies that from the 50s, 60s, and 70s that had a lot of motorcycle riders in it, and they all drive Harleys. So Harley was a big thing for the baby boomers and Gen Xers. But the millennials and the Gen Z, not so much. Look where Harley Davidson is. Here's the high, 44. Here's the bottom down here, 25. That's almost a 50% drop. Okay. Well, up, down, up, down. Now she's going back up again, 26.60. The 27 is going from 20 to 35. So you could get your 1% if you liked Harley. So let's take a quick gander at it. A year ago, we're at 37. The high of the year, 44. The bottom of the year, the last 30 days, right there. Okay? 30-day high, 30 days ago. 30-day bottom, a couple of weeks ago. Okay? Down, up, down, up. Now, what happened on Friday? That does not look too good. So, I'm going to say no to Harley Davidson for this week, even though I already own some. Now, I already own some, so there's nothing I can do about that, but I have no intention on selling at a loss. Remember, this year, we are coming into week number 9. Okay? 52 weeks in the year. We are officially in week number 9 as of tomorrow morning. So, I got 8 weeks, 0 losses so far. So, I'm looking to get the whole year with 0 losses and still get my 1% every single week. All right? So, let's keep on going. Next on the list, HPQ. Hewlett-Packard. Ooh, see this right here? We're going to say no to Hewlett-Packard even before we get started because, now I like Hewlett-Packard, don't get me wrong, but your 30-day high, nope. It took me, 3 seconds to figure that one out? Let's do this again. Okay, HPQ. Now, I'm going to hit the enter button, and then HPQ, Hewlett-Packard, is going to open up. Now, I want you to time yourself. See how long it takes you to find it. Okay? Remember what we're looking for. High, low, where was it, where is it, and what direction is it going? Those 5 things. It should take you 3 to 5 seconds to see that. Okay, you ready? 1, 2, 3. High, low, was, is. What direction is it going? Up, down, up, sideways, down, up. All right, maybe this one took a little bit more than 3-4 seconds, but look at right here. Okay, this is what we're looking for, and it doesn't take that long to figure it out. You cannot disguise the high, right there. You cannot disguise the low, right there. Where was it? Easy. Where is it? Right there. Now, where's it going? This is the important thing. Okay, up, down, up, sideways, up. Here's the high, down. Now look at this right here. Okay, this is the last 30 days. Which basically means down, up. What do you think is going to happen next? What's going to happen next? Usually, not guaranteed, but usually from 31 to 35 is a $5 move. Now, a $5 move on a $30 stock, well, that is a 15, maybe a 15% increase. If you see a stock and you own a stock and it jumps 15% in 3 weeks and you don't take that profit, that's your own damn fault. Because there's 2 things to remember, and this is really important. You remember 2 things, and you should always be saying this to yourself. It ain't a profit It ain't a loss until you take it. That's important. It's not a profit or a loss until you take it. But profits, nobody ever went broke taking profits. Okay? If you bought it down here and it shot up 10 or 15% and you don't take your profits, you got no one to blame but yourself. So I'm going to cross off Hewlett Packard. Don't look that good today. Next, Walgreens, WBA. Now, I do own a bunch of Walgreens. Okay? It doesn't look very promising. Okay? High, low, was, is, all that stuff. Look at right here. Here's the last couple of weeks. I want to take a good look at this one. Okay? At 10.30, the 10.50s are going for 17. That's more than 1%. That makes sense to me. However, what's the chart telling me? Okay, chart's telling me a year ago we were at 21.50, high of the year 22.12. She drops down to this bottom right here and just keeps going sideways. Well, look at the last 30 days. Okay, here's your last 30 days. 30-day high, 30-day bottom, shoots up, 1, 2, 3 days to the downside. Yeah, no. Sorry. Now, I already own some. If I didn't own it, I sure shit won't be jumping into it this week because I'm going to wait for this thing to fall and find a new bottom. Because that's what it's doing. It's going down, got the profit taking. As soon as she finds a new bottom, turns around, goes back up, then I'll think about buying some more. But at this moment, no. No to Walgreens. NJR, I have no idea what NJR is. Somebody asked for it. NJR. Hell no. Didn't take long to figure that out. Monthly. 21 March, 17 April, 16 May, 15 August. Those are months. You cannot get weekly cash flow from a monthly optionable stock unless you're willing to sit in front of your computer. I already told you, I ain't doing that. 5 or 10 minutes is all I want to do. Look where my positions are. What makes sense for this week? Does it make sense? Great. Okay, no. No to NJR. AMD, I can tell you right now, it's going to be a no. Advanced Micro Devices. Okay, high, low. Where was it? Where is it? Look at this. Down, up, down. And it's going down still. 111. The 111 is 244. You will get your 2%. But it's in a downward trend. Well, let's look at the last couple of weeks. Here's your last 30 days right here. Okay, here's your last 30 days. High, low, went up. Now she's coming back down. Nope. Last on the list, Wally World. WMT is probably going to be a no, and it is. Okay, it'd take you 2 seconds to see that. Here's the high. Yeah, no thank you. All right. That's everything you guys had me to take a look at. So what I'm going to do now is go back to the questions and see what else you guys got from me. All right, so let's go over here to YouTube. What do you guys got? AMD, we looked at that. So no. Hormel, we looked at that. Meh. Spaz. All right, thank you. J Series RAM, no idea what that means. Bill Gates is doing lives now. Okay. This cyclical stock, okay. Related to price to book, okay. General Motors seasonality looks just like Ford's, yep. Palantir, you talking about that stock? Nope, don't like it. Palantir isn't a dividend stock, it's a no. DVN. We'll take a look at DVN. I like DVN. Okay, so hold up on that one. Oh, Vasale wants to take a look at Bitcoin. Let me think. No, Bitcoin is not a dividend stock. Dividend stocks only. Ooh, Jamar wants to take a look at Southwest Airlines, LUV. Of course, we'll take a look at that one. Love that one. I am doing wonderful. Mr. Roblox, what's happening? Steve Tucker. Just as well, throw X into the mix. Ooh, we like U.S. Steel. And I actually have some. All right, let's keep on going. Indian stock market. Unfortunately, I don't do the Indian stock market. Sorry about that. Do you avoid buying before a dividend because of the expected drop after? No. Mitch, as a matter of fact. Hold on. Mitch just brought up a great question. Let's go there, and let's go right here, and here we go. All right, Mr. Mitch, are you ready for this? This here is an EX dividend calendar. You probably notice it because up at the top it says February 2025. Okay, we are here Where the hell are we? The 23rd, right here, Sunday. So this week we have SPGI having a dividend, DOV having a dividend, and TNC having a dividend. Now, the interesting thing about a dividend calendar, an EX dividend calendar, it lets you know what companies are paying out a dividend and when. Okay? Now, I have mine selected for a certain set of stocks to take a look at. Those are the only ones I like, ones that are consistently profitable. So here's the thing. If I want to collect the dividend on target, I have to buy, see, here's target right here on the 12th. Let's isolate it right there. Okay. Target right here on the 12th. If I want to collect this dividend, I have to buy it before the 12th. Any day. The 11th, the 10th, the 4th, the 29th, the 27th, the 31st, the 6th. Any day before the EX date, and I qualify for the dividend. Now, interesting thing about dividends. Stocks move for two reasons and only two reasons. One is called an unknown reason. Hurricane, flood, tornado, earthquake, lawsuit, accident. When I say an accident, kind of like, remember when British Petroleum sprung a leak in the Gulf of Mexico? Or the Gulf of America? That's that new thing. Okay? It's kind of weird if you think about it. Is it the Gulf of Mexico or is it the Gulf of America? Take a look at the continents. North America, South America. A little body of water right here. North America, South America. Gulf of. Huh? Okay? Depends on how you want to look at it. Anyway, besides the point. Where was I? Squirrel. Oh, so anyway, if I want to buy the stock, I buy it before the EX date. This is the EX date here, any one of these days. Now, stocks only move for two reasons: known reason, unknown reason. So when the British Petroleum sprung a leak in the Gulf, I don't you can say the Gulf. You guys figure out what you want to call it. The stock dropped. When Exxon Valdez crashed in the Northwest, the stock dropped. Okay, when Apple got sued, the stock dropped. 3M got sued last year, the stock dropped. Certain things, unknown events, they just happen, and the only thing you can do is react to them. You can't plan for that kind of stuff. That's an unknown reason. Second one is what's called a known reason. What is a known reason? Well, a known reason, you see this right here? Dividend, earnings, see that? Those are all earnings. Conference calls, okay? Stock splits, nothing there. An economic event, nothing there. Futures liquidation, market drive, dividend, yeah, okay. These are all what are called known events. This is most of them, not all of them. Okay, we know what's happening just by telling the calendar. So how does a stock react to a dividend? Well, just before the dividend is paid out, the stock has a tendency to go up in value. So if the stock is going up in value, that is a tidbit of information that I can use. So it depends on how do I want to use it. Okay, now what happens after the dividend is paid? Let's go back to those green dots. Okay, after the dividend is paid, stock has a tendency to go down. So wouldn't it make sense to buy the stock before the dividend date, like 2 weeks before on a Monday? That way I can buy it on a Monday, the 27th, collect a premium, 1%, do it again if it doesn't hit my target, do it again if it doesn't hit my target, collect a dividend, and keep doing a covered call every single week until it hits my target. But the question would be, do I like Target? Do I want to buy it and own it? They have a great dividend. They are, in fact, Target is a dividend king, which means they have increased their payments to their shareholders, that's you and me, for more than 5 decades. Every single year, higher and higher and higher dividends to the shareholders. Well, that's what I'm looking for. Consistency and profitability. All right. So, yeah, to answer your question, no, I don't worry about the dividend. I only keep it in my mind to make sure I'm buying it before the dividend and hopefully not collecting the dividend, because the stock usually goes down after the dividend is paid. All right. James wants to take a look at NJR. I never even heard of NJR. Did I already look at NJR? I already did. That's a no. Sorry. All right, so let's keep on going. Any stock market do you avoid? Nope. Chasing Jack. Hey, James, can we check out Alcoa? Okay. Chasing Jack, thinking of putting all my eggs on that basket. Oh, brother, you don't want to do that. Well, here's the thing. I think it's a great idea for you to do that. Why do I say that? Because you're going to learn a very important lesson that I learned a long time ago. Hold on, let me explain it to you. Now, you're thinking of putting all your eggs in one basket, which would be Alcoa. I don't know why. Let's take a look. Okay. High, low. Where was it? Where is it? Up, down, up, down. 34.40 to 34.50 is going for 90. Oh, that's just a little bit less than 3%. What does it normally do? Well, this time of year, Alcoa normally all right, interesting. Well, we're here. Let's get this over here. Right there. Okay, here's where we are right now. Normally, should go down another week and then shoot up the next 2 weeks. Okay, if that's what you like. But you can't ignore this. Hold on a second. This is the current movement. A year ago was the bottom, 24.68. The high right here, end of November. Look what happened. She dropped. Now she's going sideways, and she dropped again. So why the hell would you want to do that? Now, the reason, Jack, down, up, down. Yeah, no. The reason I say it's not a good idea to put all your eggs in one basket, I did that 10, 15 years ago. Yeah, I did 15, 18, 19 years ago. I did it a long time ago, before my daughter asked me to teach her. Okay. There was a company called Real Network, RNWK. I think that's what it was, RNW. Anyway, besides the point. I put all my money into it because I was looking at the chart and I was thinking to myself, this thing cannot, because it went up like 35 points. $35 in 1 week with no news. So I thought to myself, well, if it went up $35 on no news whatsoever, more than likely, RNWK, that's what it was. More than likely, on Monday, this thing should have profit taking and the stock should drop. No, did not happen. As a matter of fact, it went up another $45. And I got a phone call from my broker and said, hey, James, you're done. No hi, no how you doing, no verification. Is this Mr. James? Is this your account? Is this, is that? Nope. Hello, Mr. James, you're done. We're liquidating everything you have to satisfy your debts. That's the phone call I got. Not a single person have I ever met has ever gotten that phone call. I got it. Hello, Mr. James, you're done. That was all they said. Not hi, hello. Mr. James, you're done. We're selling off your positions to cover your losses. So putting all your money into one basket, not a good idea. But you know what? You do it because apparently if you're not going to listen, you're going to learn the hard way. Or you're going to be right and say, oh, this is great. And then you're probably going to do it again. And eventually you will get burned. Never, ever, ever, ever have everything in one basket. You know, some people would say, hey, put everything in one basket and keep your eye on your basket. Okay, you know what? I don't give any advice. I'm just saying what I did didn't work out so well for me. All right. So Alcoa, unfortunately, I would like to see what happens on Monday. Was this an anomaly? Why was the big drop? Next. Same question on the other YouTube channel. Oh, all right. What do we have here? Steve Odell, how are you doing? Get some XRP. That shit's about go to the moon. Okay, cool. I'm glad you like XRP. Don't know what you're doing here, but all right. EX dividend date for AA is coming up the 5th of March. Okay. James knows his stuff. Following him, I'm up 62% in the last 6 months. Wow, Paul, good for you, dude. That's better than I did. I only did 63 last year, and you did 62. If you sell stock tomorrow at 8:30 a.m. Central Time, how soon can I buy another stock? Oh, Steve, hypothetically speaking, you should be able to sell in the morning and then buy in the morning. Immediately, right? Assuming market order, and it's filled. Okay. All right, so that's all the questions over on YouTube. Let's come over to TikTok. We have over 100 questions. Wow. All right, so let's do them one at a time. So far, we only have 3 stocks that you guys want to look at, but I'm pretty sure. Jim Bowman, how are you today? All right, right there. All the way back. There we go. All right, here we go. Here we go. Altria. Okay, Soul Seeker in New Jersey wants to take a look at Altria. That's M-O. All right. Jeff, thank you for sharing. Let's keep on going. James. Wait a minute. QCOM coming off of strong earnings and into the EX date. Okay, Rocco wants to take a look at QCOM. QCOM. Luis, NVO. What the heck is NVO? Now, Louis, just in case you didn't know, anytime I say, what the heck is that? That's probably not a good thing. Okay, so I've been doing this long enough. I know almost all the stocks that are consistently profitable and have weekly options. So let's keep on going. Okay, Charlie. Uh-oh. B-Rad Daddy wants to take a look at our Riot. I actually have some Riot, Daddy. Charlie, we already looked at Hormel, but Pepsi, we'll take a look at that one. P-E-P. How about Enbridge? E-N-B? E-N-B. We'll take a look at that one. Milton, Advanced Auto Parts, huh? Keep on going. Ocean. Best of TikTok back again. Sidar, how are you today? You still young? No, I'm getting older, dude. Thanks, Rob. Feeling a little, what do you call that? Tired and beat up today. I played soccer today. I played soccer yesterday, and it usually takes me 3 days to recuperate. Yeah, I'm going to be hurting tomorrow. That much I do know. MSFT, somebody wants to take a look at Microsoft. Who is that? NJ78. No idea. I bought a call that SoFi was going to hit 15. Is that good? Okay, so Jackson, basically you're in the wrong place. Number one, I don't do SoFi. They don't have 20 years of increased profits. And I don't buy options. I sell options. Because here's the thing. And that's a good question. You know, if you think it's going to work for you, awesome. Great. I don't buy options only because 80% of all options expire worthless. So why would I want to enter into a trade where there's a possibility, an 80% possibility of me being wrong? That doesn't make sense to me. I would prefer a simple, safe, predictable, and consistent strategy. And I know it only gets 1% a week, but I'm okay with it, 1%. Now, you might be a little bit on the younger side, and you might want to take those kind of risks. This is not the kind of website for somebody like you, if that's what your goal is. If you want to buy options, you're probably in the wrong place. Because I want safety, predictability, consistency of profitability. I'm not looking to get something to buy it and have it shoot up. Okay, that's speculation and that's capital appreciation. No, I like safety, predictability, and consistency of profitability. All right, so let's keep on going. All right, Sylvie. Sylvie wants to know the book value of Tesla. That's an interesting question for the fun. Now, I don't trade Tesla. And the reason why I don't trade Tesla is they don't have any dividends, so it just doesn't make any sense to me. TSLA. Now, the funny thing is, I was listening to some videos on people who talking about Tesla. And Tesla has an interesting view. Okay, the current book value for Tesla is $22.67 a share. Doesn't make any sense. Operating cash flow, $15 billion. That's nice. Total cash per share, $11. Total debt, $13 billion. And the operating cash flow is $15 billion. So yeah, $2 billion float. All right, anyway. All right, so yeah, sorry. I don't do Tesla because Tesla has no dividends and it doesn't make any sense to me. Sorry, if you like it, fine. You know, you buy it. I mean, don't get me wrong. I like Elon. He's a very bright guy, but I don't do. I don't do stocks that don't pay dividends. GM is paying a dividend next week. Okay, Jonathan, we already looked at General Motors. And Carol. Thank you there, Miss Carol. Sorry, messed typing up. All right, Jonathan. NJ78. So you're selling call. Yep. Theo Vaughn. What are your thoughts on SMCI? All right, we'll take a look at SMCI. SMCI. So we got 10 stocks so far. Let's get a few more. Oh, look at this. R.L. Brando, another TikTok guru. I'm going to take that as a compliment. Thank you. Captain Hindsight. Oh, awesome. Thank you there, Mr. Brando. Max. So Brandon wants to take a look at WiMAX. Ugh. WiMAX. I don't know why, but okay. What was that? What was 11%? Okay, Mikey G. I told you that 11% one was on Riley. You ain't going to get where. Those are the numbers now, Mikey. Okay, it says 11%. But more than likely, when the market opens, all these numbers are going to change. So tomorrow on Riley, yeah, you don't want to jump into Riley until you see what the numbers are first. Okay, Don D. Voice, SPY. SPY. Ooh, Grateful Dad, Nike. NKE. Let's keep on going. Okay, we already did Pfizer. We already did Macy's. ELF. Okay. KHC. Okay, Truth wants to take a look at KHC. Kraft Heinz. KHC. Riley, we already looked at. Riot, we already looked at. Punto, the 10-year bond. I don't know. Is a 10-year bond paying 20 to 30 to 40% per year? Trends do not look great. Okay, Biggerfoot. I'm not quite sure which trend you're talking about or which company specifically. Because no matter what you're looking at, something is always going up and something is always coming down. Okay, even during the pandemic where a lot of stuff went down, there were certain stocks that went up. Okay, money doesn't disappear. It just goes from one person to the next. Mark, the realtor-only weekly dividends. Okay. Truth, what showed 11% premium? Mikey G, the 11% premium was on Riley. Yeah, and most likely it ain't going to happen. So check the numbers first. B-Rad Daddy, I'm in Riley since 2004. I'm 20% wrong on it. Just added some at 350. Okay, any thoughts on Microsoft? Okay, Alpha Trader. We're going to take a look at Microsoft in a couple of seconds. I got a few more questions to go through before we go there. If you own Foot Locker at 22, why would you do the 18 option? Darren, it's an excellent question. Okay, I bought Foot Locker at 22. When it dropped down to 16, I sold the 18.50, and then it went up past that strike price. So in order to not lose money, I actually roll it forward and collect a premium until I get to my break even again. Oh, Dickapaz 69. What is this bro yapping about? Oh, love haters. If I got enough haters, means I must be doing something right. Love dividends, especially those high yield full port MSTY. So Jeremy likes MSTY. MSTY. Okay. People listen to him. I'm up 62% in 6 months. All right, Paul, thank you for that. Paul, what are the major stocks you trade? True, thank you. Microsoft, we're going to take a look at that one. Bad EEP. Okay, Burn Dog, EEP. What the heck is that? EEP. KHC, we'll take a look. No, what? You sell covered calls? Yes, I do. Why not on Halliburton? Okay, Black Pearl, we already looked at Halliburton. Halliburton is in a downward trend at the moment, so downward trends usually doesn't make the good. High premiums of the week. Changes every Monday. Absolutely right. I just walked in. Black Pearl, sit, chill. I'm here every night from 9:30 to 11:30. Holy shit, it's not 11:30 already. We're going to go through this last set to answer these questions, and then we'll be done for the night. It's worth about $5. Yep, covered call. You said covered calls every week, every Monday. Shanasta neck. Okay, yep, covered calls every Monday. Raphael, you said you don't sell at a loss, but if you are in at 22, the covered calls at 19, you're risking losing, correct? Raphael, you're 100% correct. However, Raphael, what you're missing, I have no intention whatsoever at selling at a loss. So even though my strike price is $18.50, and the stock price where I entered it's at 22. Well, whoever bought that option from me has to exercise it at a certain price by a certain date. If you look at the premium in which that person paid for it, and you add it to the current price, well, I am not at a risk of losing because the difference between what they paid and the current price is higher than the current price. So it makes no sense whatsoever for someone to buy it from me. Christopher wants to take a look at University of New Hampshire, UNH. Do you buy credit default swaps? Sorry, Eric, no, I don't. I do dividend stocks only for weekly cash flow. What's the most you ever made? Okay, that's an interesting question, but you got to actually ask it in a better format. Sold your shares or covered calls? Yep. Why do we need them to have dividends if we do covered calls? Oh, that's a good question. Why do we need to have dividends if we're doing covered calls? Well, here's the thing. Stocks move for two reasons and only two reasons. One is a known event, one is an unknown event. Unknown events you cannot plan for. You cannot make plans for an unknown event. It just happens and you have to react to it. So a known event, a dividend, we know every single year when a dividend is going to be paid. Specifically with companies that have consistently increased their dividends for more than 2 decades. That's 20 years, every single year. They pay the same time every single year. Okay, so week one, hold on a second, let's do this real quick. Market watch, let's go out of there. Let's go to, I don't know. Okay, so here's week one of the year, okay? International Toolworks, NFG, I forget who that is, Nucor, ABM, FRT, DSN, SYY. Okay, Cisco, Nordson, Frontier, ABM, I forget who they are. So this is the first week of the year. First week of the year. So every single first week of the first quarter, the first week of the second quarter, the first week of the third quarter, the first week of the fourth quarter. These stocks pay the exact same time the first week of every single quarter. Every 90 days, these companies are going to pay a dividend. So every 90 days, I take a look at these stocks. Which one looks right at the moment? If it doesn't, fine, I'll look at it in another 90 days. Then I go to the next week, then I go to the next week, then I go to the next week. Whatever stocks I like, I will continuously trade those every single 90 days because they pay a dividend every 90 days. AGNC, Eric. How much do you accumulate? 1% a week, Eric. AGNC. Oksana. Kagdala. Rjalsta. Anyway, let's keep on going. Oh. William McKinney wants to look at a Union Pacific Railroad. Union Pacific. Is it UPX? Is UPX Union Pacific? I don't know. Let's find out. UPX. No. Damn it. Okay. William McKinney. I need to know what the stock symbol is on Union Pacific. For some strange reason I don't. 2009 was 49 cents a share, right? Josnar, I have no idea. Hormel. Oh, for Hormel. Okay, hold on. Oh, so anyway, I can't read that name, whatever it is, but why do we need them to have dividends if we're doing covered calls? Because here's the thing. When a stock goes down, what are you collecting as the stock is going down? Because do not kid yourself, stocks go up, stocks go down. When they come down, let's think of a good one. What do we have here to take a look at? Okay. See, as it's going up, you get capital appreciation. As it's going down, what are you getting? Absolutely nothing. If the company consistently increases its dividend every single year, absolute worst case scenario, I have a company that gives me more money every single year. That's why I like dividend stocks. Also, dividend stocks have a tendency to go up just before the dividend. So if we know when the dividend is going to be paid, we know when to jump in because the stocks go up just before the dividend. Okay, so let's keep on going. What else we got? KAC, we're gonna look. We already looked at that one. Hormel, we got that one. Shane, Shanastanek, taxes. Yep. If your shares get taken out, you owe taxes versus holding for the year. Yeah. So here's the thing: you go shopping for a Rolls Royce. Do you ask them what kind of gas mileage the car gets? Probably not. So if you're getting, let's say, Alcoa, 5% a year, okay, well, you don't have to pay taxes on that. If you're getting 50% per year, do you pay taxes on it? All depends on how you have your account set up. If you're into a trust, no taxation. If you're into a nonprofit organization, no taxation. If you're into a unincorporated business trust, no taxation. If you're in a corporate account, if your account is set up in a corporate account, profits can be offset by losses of the corporation. If you're in a personal account, yeah, you have to deal with taxes. If you're in an IRA, a Roth IRA, no taxes. All depends on how you have your account set up, and that I suggest you take a look and you talk to a tax strategist or a tax planner. D. Santos, you trade? Yes, I do. Oh, sorry, I came in mid-sentence. Is there a gold dividend stock? No. Walgreens, we already looked at that one. Harley went woke and the stock tanked. You're absolutely right. Do you have any stocks from this generation? Yes. Oh, no, I don't. Because, see, when you say this generation, now, which generation are you talking about? I'm a Gen Xer, born in the 60s. Okay, I have stocks that were before me because I like consistency of profitability in 2 decades of profits. Why don't you trade Bitcoin? Because there's no safety in Bitcoin. Okay, the only way you're going to make money in Bitcoin is by sitting in front of your computer and trading it consistently. Yeah, I don't trust computers as far as I can throw them. Jonathan wants to take a look at Nextera. N-E-E. N-E-E. All right. QDTE? Oh, hell no. Have you done T? No, we have not. QDTE. I have no idea why we're looking at that one. Wayne wants to take a look at AT&T. We're going to do a few more. Eli Lilly, L-L-Y. Okay, Gen VX, VKTX. What the heck is that? VX. No, VK. VKTX. Wow, we got like 30 to go through. I'm going to go through them really quick. Misty, Intel. Ooh, Intel's not on the list yet. INTC. INTC. When did I start investing? Oh, 25 years ago. What? And what's a good age to start? Yesterday. No matter how old you are, yesterday's the best time to start. Dat man, what's happening? Okay, William, over here on Facebook. Dude, I'm still waiting to hear what is the ticker symbol for Union Pacific. Is it UP? Could that be it? Could it only be just UP? Union Plastic. Nope, it's not UP. Oh, DH wants to look at Abbott Labs. ABT. Okay. SOL. What the heck is SOL? Shit out of luck? Uh-oh. Wow. SOL. SOL. Oh, why don't I trade Bitcoin? Alden already did that one, chasing Jack. James, any thoughts on what happened to Riley on Friday? No, not at the moment. Grab, G-R-A-B. G-R-A-B. Can you give your opinion on TJX? TJX. TJX. PLTR. PLTR. Mags. Never heard of Mags. MAGS. I'm going to take a couple more, then we're going to be done. We're shorting everything on no. No, I'm not shorting anything. Sell covered calls when implied volatility is high on stuff to get more premium. Okay, if that works for you. Bro, you not even replying to me. DeSantos, I'm not sure what you mean by that. Oh, okay, thanks. I'm like 50 behind, yeah. UNP. Oh, UNP, that Union Pacific? UNP. Union Pacific. All right, we'll take a look. No, look at that right there. See that? Okay, 30-day high, 30-day low. Look, she's in a downturn at the moment. Not this week. Now, don't get me wrong. I like Union Pacific. I really do. But at this moment in time, it's in a downtrend. Okay, so I don't look at the downtrend. I want to find its bottom, turn around, go back up. Your 30-day bottom's right here, which is at 238, which means we got another $10 and $20 to come back down for this thing to keep dropping. Sorry. All right, let's keep on going. I'm like, why doesn't he see these comments he's reading? I see all the comments. It's just there's so many of them, I can't do them all. What's your top dividend stock? It would be Macy's, Kohl's, Nordstrom's, and what's the other one? UNP, yep. Unprecedented, you got that one. Oh, well, that's it. All right, great. All right, so I answered every question here, every question here, every question there, every question there. Now we're going to look at the last of the, you guys just gave me this whole list right here, so we're going to zip through them really quick. Eric, EBMT, what the hell is that? EBMT. Okay. All right, so here's how this is going to play out. You ready? It is 1137. I got about 30 or 40 stocks to look through. I'm going to breeze through them really quick as if I was going to invest in them. It's going to be a yes or it's going to be a no. I'm not going to do any more examples for the evening. It's just a simple yes or no. You know, you guys gave me stocks to look at. I'm going to look at them. Okay, now I'm going to stop it right here. No more questions. Okay, so no more questions. I'm just going to breeze through the stock, go through them really quick. First on the list, Devon Energy, DVN. DVN. No. Okay. High, low. Now he's up here. Here's the new 30-day high here. It's getting ready to come back down again. No to DVN. Next, LUV, which is Southwest Airlines. Interesting. Okay. High, low is down, 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 right here. Oh, that's a tough one. Okay, 30-day high, 30-day bottom. She shoots down, up, down. Now she's going up, but what happened here on Friday? Okay, $31. The 31's going for 13. No, sorry. X, U.S. Steel. Now, I do have U.S. Steel at 41, but it's in a downturn also. Look at that. Last 2 weeks. Here's your 30-day high, and it's coming down. So U.S. Steel, I'm going to wait for it to find the bottom. But the 30-day bottom's right here at 34. Well, in a couple of days, that's going to drop off, and this is going to be my new 30-day bottom, 35. Okay, but right now we're at 37. Okay, the 37's going for 88. That's a nice premium if you like U.S. Steel. But look, you cannot argue with the fact that it's going down at the moment. So once it hits its bottom, it's going to hit a bottom and it will turn around and go back up. That's the time to buy, not as it's falling. That's U.S. Steel. Altria. Shit knuckles. The only reason I say that, I shorted it. Okay, so 30-day high. No, I don't buy at the 30-day high. 30-day bottom, 30-day high. Look, 1, 2, 3. 3 weeks going up. And you think it's going to continue doing that? No, in my humble opinion. Okay? I always tell people, if you see something you like, make sure you do your research. When I see this right here, I think there's going to be profit taking. The bottom's here at 50. She jumps up to 55. That's a 10% increase. Okay? 10% increase in 1, 2, 3 weeks? Yeah, I'm taking profits. No to Altria. Next on the list, QCOM. Interesting. What happened here? Okay, big drop on Friday. Thursday was a down day. Friday was a down day. I want to wait and see this thing find the bottom, which means Monday, Tuesday, Wednesday. Wednesday would be the earliest I get into this thing. Because, look, bottom here, shoots up, pulls back, shoots up, pulls back. It's coming down at this moment in time. It's not that difficult to read. I didn't even look at the numbers because the chart's telling me it's on the downside. NVO. What the heck is NVO? NVO. Nova Nordisk. Okay. Never heard of them, but look at this. A year ago, 124. High of the year, 148. Last few months. Okay. Last 30 days. Yeah, too many gaps here. Look at that big gap here. Gap, 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 gap. Yeah, this thing's all over the place. 89, $90. The $90 go for 110. I got a little bit weird feeling about this one. Is this NVO? NVO. All right. Historical data. All right, I want to see what the dividends look like. 2 dividends? Are you shitting me? Okay, more than 2. All right, I'm going to go to 2,000. Okay, so they were at 1 dividend per year. Okay, 1 dividend per year. 4, 5, 6, 9, 10, 14, 18, 25, 32, 42, 38 backwards, 48, 22, hell no, 33, 24, 34, 23, 39. No. Nope. Sorry. NVO's a no. Now, Riot. RIOT. Nope. 4 days in the downside. 1, 2, 3, 4. I want to find the bottom, wait for it to turn around, go back up. Here's your 30-day high. Here's your 30-day bottom. No. No to Riot. Pepsi. PEP. Ooh, what is that? I don't know. Makes me a little uncomfortable. 30 days ago at 148. Shoots up to 155. Drops down to 142. 1, 2, 3, 4 days to the upside. Goes from 142 to 153. That's $11. Okay, that's what, 7%, 8% increase? I don't know. Could it go higher? Maybe it can. But that's too close to the high to me, because the high is right here, 155. Well, right now, 154.50 was Friday. So what? No, too close to the high. Enbridge, ENB. Oh, hell no. 2 reasons. Number 1, look at this big pullback here, and it's a monthly. Nope. Advanced Auto Parts. Downturn. Okay, high, dropping. Looking for a new bottom. Bottom fishing. Where's the bottom? No, thank you. Microsoft, MSFT. All right, what happened here? Okay. 1, 2, 3, 4, 5, 6 days to the upside. Big drop here. What happened? Okay, here's your 30-day high. Here's your 30-day bottom. She shot up. What happened on Friday? I need to answer to this question first before I jump into Microsoft. But if I'm going to, the 410s go for 425. You're getting your 1% out of Microsoft if you like the company. But I want answer to this question first. And we're way past 11:30, so we're just going to keep the flow rolling. SMCI. 30-day bottom, 30-day top. Profit taking's already started. This baby's coming down. Okay? No. WiMAX. One, 2, 3 days to the downside, new 30-day bottom. Once we find the bottom, and it's a hell no. I don't do monthlies. The only way you're going to make money off of a monthly is to sit and watch it. Okay? To sit in front of your computer, look for a setup, look for that. Yeah, no thank you. No to WiMAX. SPY. I'm going to say no to SPY right off the bat. I'm not even going to look at the chart. I'm going to go right here to the dividends. SPY. And here's why I don't like SPY. Are you ready? Number 1, it's $600. I don't like paying over $250 per share. Well, this one's $600 a share. Okay, let's go back to 2005. That's 20 years, right? All right. 47, 49, 52, 67, 52. Wait. That's going backwards. Okay, isn't consistency of profitability supposed to go higher, and higher? Not 3 steps forward, 1 step back. That's not increasing. Okay, but hold on. It gets worse. Okay, 49, 52, 67, 52 backwards. 56, 58, 79, 55, backwards. 66, 72, 78, 64, backwards. Was that 4 times so far? 5 times so far? All right. 56, 52, backwards. 51, backwards. 59, 48, backwards. 53, 60, 65, 55, backwards. 63, 63, 77, 61, backwards. 69, 78, 102, 69, backwards. 84. Yeah, this is up, down, up, down, up, down. But wait, hold on. It actually gets worse. Now, we're only on 2013. You get a whole shitload more, and already we're at 8 times up, down, up, down. No, but it gets worse. Hold on a second. Let's go over to the summary. Okay, now all the financial information is available. You can go to Yahoo Finance, Google Finance. You can go to New York, the NYSE, and take a look at that numbers. Or you can go to almost any financial website. Okay, here's another reason why I don't like SPY. 1.1% yield. What does that mean? Well, that means you put in $600 per share and you get a 1.19% return for the year. Fuck no. No. Nike. NKE. Okay. 30-day high, 30-day low. Look at it. She shoots up, going sideways. Baby's coming back down, and it's too close to the 30-day high. I'm looking for something that's doing this thing from here, then shooting up. This is where I want to get in, right here, not up here. No to Nike. ELF. What the hell is ELF? Alrighty. That's what I'm looking for right here. See that? Here's the bottom. Now it's jumping up. ELF Beauty. You like that one? All right. A year ago, we're at 184. The high of the year, 221. Look at the last 90 days. High, low, where was it? Where is it? Look at this. Up, down, sideways, down. Now she's going up. Okay, not huge, but still. Last 30 days, right there. Okay, 30-day high, 30-day low. Now she's going up, but very slowly. 74.92. We look at the 75s, 267. But we have one minor problem with ELF. ELF. I want to see the historical data. Come on. Dividends only. Oh, there it is. There are no dividends in a selected time period. ELF, no. No dividends, no thank you. KHC, Heinz Ketchup. KHC. Now, Heinz Ketchup is a dividend king. They've been around for over 100 years. And oh, come on. Really? Way above the 30-day high, which means this baby can turn around and come back down again. Sorry. KHC. MSTY. Misty. MSTY. Now we're going right to Yahoo Finance because I already know what's up with Misty. Okay? Okay, this is why I don't like Misty. MSTY. Not even 1 year of dividends yet. Not even 1 year. You're throwing your keys to your brand new car to a toddler who can't drive. Okay, they may be the greatest thing since sliced bread, but look at this. 413, 252, huge decrease. 303, 233, decrease. 194, decrease. 185, decrease. 420, 442. That's nice movement. But goes from 442 to 308 to 228 to 202. Hell no, that's going backwards. No, thank you. Okay. Let's go. Next. No to Misty. EEP. No idea who the hell that is. That's what it is. No options, no thank you. University of New Hampshire, UNH, and actually Universal Healthcare, United Health Company, or United Health Group, whatever. Okay, UNH. Oh, hell no. Look at that right there. Okay, now this is going to be a great opportunity once you find out why it made the big drop. And are you going to keep an eye on it, wait for it to turn around and jump up? Maybe, but I don't buy anything as it's tanking. I wait to find the bottom. See right here? Bottom, then she goes up. Well, here's the bottom, or is that the bottom? See, tomorrow it could be lower. But right now, that's the current bottom. So no to University of New Hampshire. Nope. AGNC. AGNC. Okay. AGNC. Oh, hell no. What do you think? 1, 2, 3, 4, 5, 6. 6 weeks to the upside. Do you honestly think it's going to continue to go higher? That's not a game that I play. I like safety. I do. Sorry. I like safe, simple, consistent, and predictable. That's it. Safe, simple, predictable, and consistent. Terribly sorry if it's only 1% a week. If 50% a year for you is not enough, 10 minutes a week, 10 minutes a day. Okay, no, sorry. No to AGNC. Ooh, Nextera, NEE. NEE, Nextera. Now that looks good. See that right there? That looks freaking awesome. So let's take a quick look at that one. You ready? The bottom of the year was a year ago, 53.87. Okay. The high of the year right there, beginning of October, 86.20. Well, the last 90 days, which is the last 3 months, okay, down, up, down, up, down. Now she's going up. Look what the high is, way up here, 78. Look where it is right now, 71. Nice upward trend. That looks great. 71.50, we'd be looking at the 72s, 51 to 80. Shit. You ain't getting you 1%. Sorry. Okay? 72.38. Okay, that's the current price. So the 72s are 51 to 80. Sorry, the numbers just don't work. Now the chart looks freaking awesome. It does. That's what I'm looking for. But the numbers just don't work. But here's the thing. Okay, you're getting between 0.5% to 0.75%. Now, 0.5% per week is 26% per year. Well, this is a little bit more than 0.5%. So you could get 30% a year if you do Nextera every single week and get whatever percentage that is. But it's not 1%. So for me, it'd be a no. So no to NEE. QDTE. QDTE. Monthly, no. Now, somebody wanted to look at AT&T. Hell no. I don't buy anything at the high of the year. Eli Lilly. I don't know. What do you think? 30-day bottom? 30-day top? Yeah, no. No to Eli Lilly. VKTX. VKTX. I have no idea what the hell this is. Oh, nice chart though. Look at that. The high, the low. Where was it? Where is it? Look at this. Down, sideways, up, down. Now she's going up again to 35s, 35, $2. Yeah, this thing probably has no dividend. That's why it's $2. VKTX. Well, imagine that. There are no dividends. No, thank you. Sorry. I know it had to be too good to be true. I mean, the number. Look at that. Doesn't that look pretty? 30-day high, 30-day bottom, 1-2 days to the upside. So, wait a minute. Here's the bottom right here. 1, 2, 3, 4 days to the upside. Well, that's great if you like that company. But it has no dividend, so it's going to be a no for me. Okay. Intel. Now, I actually do have some Intel. INTC. There we go. What's going on here? Okay, 30-day bottom, 30-day top. Now it's coming down. Not something I would jump into, but I do own some. So it's one of those things. But, you can't argue with that. 30-day bottom, 30-day top. Now she's coming back down. Abbott Labs. Hell no. It's at the high of the year. No. SOL. Shit out of luck. Monthly. Oh, grab. 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 I don't know. 30-day high. Now she's coming down. Sorry. Next. TJX. TJX. I don't know if you can see that one. Looking for a new bottom. Palantir. Oh, why do I get every single day somebody wants to take a look at Palantir? PLTR. I go right to Yahoo Finance. When I go right to Yahoo Finance, you know exactly why I'm doing that. Because there are no dividends. Because me just saying no, well, people say, well, why no? Well, no, because there's no dividends. No, the name of the show is Dividend Stock Talk. Dividend stock. This thing is not a dividend stock. So why are we looking at it? Okay, there's a certain reason why I do that. Because dividends tell me when the stock is going to move. Well, if I know when the stock is going to move, I can do a trade on it. Great, what trade am I going to do? Well, I'm going to do one that's going to make me money. All right. No PLTR, MAGS. What the hell is MAGS? I have no idea what that is. MAGS. Okay. Yep, that's in a downward trend also. Nope to MAGS. EBMT. EBMT. Hell no. Two reasons. Reason number one, it's at the high of the year. No, thank you. Reason number two, no options. Well, why the hell am I going to do that? I don't want to sit and look at anything. All right. Now, that's everything you guys gave me to look at. Now we have some more questions, so let's take a gander. Antoine, do you know anything about stock lending? Yes, I do. EBMT. What the heck is... We already looked at EBMT. That's a no. Sorry. OKLO. That's already a no. I already know that one. OKLO. BR Records. Trading is a decision, but choosing not to trade and protecting your capital is also a decision, though it's often an unseen one. Am I right, brother? Yes, you are right. Oh, SPY and ETF fund. Yes, but no, thank you. We already looked at SPY. Okay, so that's it for over there. Okay, that's it over here, and we have some more questions here on TikTok. So after we're done with these questions, we are going to be done for the day. Uh-oh. Okay, Misty, no. Abbott Labs, we already did. Don't. SOL, we already did. You're an absolute genius, thank you. I doubt, not a genius, but okay. Do you have another TikTok account? Because I swear I just swiped and it was you talking. Well, yeah, I have two TikTok accounts. One is Dividend Stock Talk right here. The other one is The 10-Minute Trader. And you'll see they're both at the exact same at this moment in time. Well, okay. So I do have two of them with 10 views. Okay. Have you checked SOL? DeSantis? Yes, we did. TJX? We already looked at that one. Ooh, what about DuPont? Isn't that DD? DD is DuPont. Alcoa is still coming down. I think it's going to go around the 37th. Okay. Dairy Lock. Where would you recommend for someone to go to learn about this? Well, your best chance is YouTube is great, and here is another great place. I'm here every night, from 9 until 11:30 usually. Tonight I was a little late because I had a couple of technical difficulties getting my Thinkorswim online. Now Thinkorswim, I love it, I do. However, on the weekends they do their uploading and they do their reconfiguring and all that crap. So on the weekends it's hit or miss sometimes. Okay. Afshan, we already looked at Grab, GRAB. Can you give me your opinion on TJX? We already did TJX. We want full degen mode 100 times in 2 hours, 20 million in 2 days. All right, that sounds awesome. Okay, GRAB, we already looked at that one. That's what we want. Adrenaline, cool beans, SOL. DeSantis, we already looked at SOL. Okay, we already looked at GRAB. We already looked at PLTR. We already looked at that one. We already looked at MAGS. We already looked at SOL. We shorting everything? Nope. Thinkorswim. Are you an options trader? Jesse, how are you today? Yes, I'm an options trader, Jesse. Bro, you not even replying to me. DeSantis, we did this a second ago. Okay? Now, I don't want to do this again. I'm like, why don't you see these comments? Well, because I stopped the comments to do the stocks. Because normally the way the comments go, they keep going up and up and up, and I can't read them all. You see the glasses here? Okay, yeah, I can't read them all. I'm getting older. And I'm not happy about it. So here's the thing. Once you put a comment in, you're not the only one that's making a comment. So I stop the comments and I read them. Every single one at a time. So I asked at the beginning of the show, I will answer each and every single question in every single comment. You just have to give me a little bit of leeway because I got 7 different channels here, and to be kind and courteous to everybody, it takes a little give and take on everyone. Okay? What's my top dividend stock? That would be Macy's. What are my thoughts on YMAX? No. Andrew, Morty, unprecedented. Okay, UNP, already looked at. Wait a minute, UNP, Union Pacific. Yeah, we already looked at that one. MPLX. What the heck is MPLX? MPLX. Yeah, no. Hims. Now, Hims and Hers, yeah, no. Did you see it? Look at that. Okay, here's the high. Now it's dropping. Yeah, no thank you. Alibaba. Oh, double hell no. What the hell are you thinking there, dude? Look at this. $80 a couple of weeks ago. Now it's at 143. You want to jump on that, you be my guest. Okay, I'm not a gambler. I'm not. I like things simple. I like safe, predictable, and consistent. This here is for consistency of profitability. And I'm only looking for 1% a week. If you want to buy something at $80, hold it until it hits 140 and keep going for that ride, you be my guest. It's not what I'm looking for. This is boring. This is slow. I don't know why anybody wants to do this. Well, other than the fact 50% a year sounds good. But you do have to put in 10 or 15 minutes every single day. Well, I'm terribly sorry if 10 or 15 minutes a day comes to 1% or 50% per year. Now, I have a couple of accounts with over $100,000. $100,000. 10 minutes a day, a week. 10 minutes a day, a week. That's an hour a week to make 1%. 1% on $100,000 is $1,000 for 1 hour. Hell yeah, I'm going to do that. That's me. Now, you guys may not have 100,000 or more. You may have 20,000, 10,000, 50,000, 1,500. I have no idea what you got. But you got to look at it this way. When you retire, the money has to come from somewhere. Okay, you're either going to do it yourself or you're going to give it to someone else to do. It's plain and simple. There are no other ways around it. No one's going to come in and just take care of you. It doesn't work that way. Well, it might work that way for some of you, but not everyone. All right, so let's keep on going. Alibaba is a no. Sorry. What software do you use? Okay, crazy Justin. This is not software. This is a trading platform. If you trade stocks, you got to trade it somewhere. Okay, either Fidelity, Charles Schwab, Thinkorswim, Acorn, Robinhood, international brokers. Whichever company you decide to do your buying and selling, it has to be somewhere. And this just so happens to be Thinkorswim, which I've been using for the last 20 years. I didn't create it. Okay, it's a trading platform owned by Charles Schwab. Follow the live. Thank you, Jean-François Derry. Bonjour, monsieur. Yeah, bonjour, monsieur. Comment ça va toujours? Andrew, I'd like to know what happened also last Friday. Okay, see, you're under the impression that I really honestly care about what happened in the market. Well, it sounds kind of weird, but I really don't. Because I have certain rules. Number one is never buy something you don't understand. Now, what do I mean by that? Well, right here, Alibaba. If I was going to seriously think about Alibaba, number one, I would want to know what's the high of the year? What's the low of the year? What is the average movement? How does it move predictably, consistently? Does it have weekly options? Are they consistently profitable? What is the book value? What is the company actually worth? What kind of cash flow will they work with? Certain questions. Never buy something you don't understand. Well, I've looked at Alibaba many times. To me, no. They're not consistently profitable. They don't have 2 decades of increased profitability. No, I'm not looking to buy low and have it shoot up. Terribly sorry if that's what you're looking for. I'm looking for cash flow. Simple, safe, predictable, consistent, 1% per week. Terribly sorry if it's only 50% per year and you're looking for more. That's what I'm looking for. Safety, consistency of profitability. What do I think about Peloton? Hell no. Crazy Justin, Thinkorswim desktop, okay. Andrew, catch y'all next time. Past my bedtime. Alrighty. Energy transfer. Uh-oh. I don't like energy transfer. Only because okay, once you're doing the premiums, okay, if you are wrong and it goes the wrong way, you get just about nothing. 1 or 2 strikes out of the money, nothing. No, the numbers just don't work good for me. TGS, I have no idea what TGS is. TGS, yeah, it's a no is what it is. That's a no. Monthly. Okay, now I said earlier, I don't do monthly options. The only way you can make 1% a week on a monthly optional stock is to sit in front of your computer all day. Yeah, no thank you. Chuck, what about SPY, SPY? What's to look for in it for tomorrow? I honestly don't know, Chuck. I don't trade SPY. And there's a reason why I don't trade SPY, and I said it a little about a half hour ago. SPY. Okay, now I'm a big on consistency of profitability. Okay, so let's take a look at the dividends. See, dividends only. Let's look at the dividends. Just a few of them. You ready? 84, 98, 83. Now, wait a second. 84 to 98, well, that's nice. That's an increase. I like that idea. But from 98 to 83, that's going backwards. 94, 114, 93, going backwards again. 103, 103, 121, 105. Fuck no. Up, down, up, down. No. Consistency of profitability is every single number should be higher, 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 higher. Okay? If you give your money to someone and say, hey, I made 10% this week. Great, wonderful. Hey, I only made 3% this week. No, he who hath shall more be given. He who hath not, even which he hath, shall be taken away. It's a Bible quote. It means if you're doing something right, it's going to keep going. If you're going backwards from 114 to 93, that's backwards. From 121 to 105, that's backwards. Hell no. There are too many companies that are consistently profitable. Now, we looked earlier from the show, right around 9:30. We looked. There are 9,945 different companies to choose from. Why would I choose something that goes from 114 to 93? Goes from 121 to 105. That's going backwards. That's not increasing. Hell no. Sorry. TGS. Didn't we already say no to TGS? Okay, I'm not going to say no again. Okay. Night, folks. Mary June, you have a good night. Dividend. Disney. Ooh, Disney. DIS. What's going on here? Okay. Down, up, down, up, down. It's actually coming down at the moment. No, I'll wait for it to come down, turn around, go back up again. Now, I do this every single day. So I have no problem whatsoever looking at Disney again tomorrow, the next day, because once it finds its bottom, turns around, goes back up, 109, the 109s are going for 127. That's more than 1%. Well, what does it do? It goes down, and then, oh, look at this. It goes up. Oh, now it goes down. Ooh, now it's going up. Now it's going down. So it's going down at the moment. So Tuesday, Wednesday, Thursday, great. Where's the bottom? I will keep looking until I find the bottom. Once it's going to be tomorrow, or it's going to be the next day, or it's going to be, or it could be this day right here. We don't know until tomorrow comes. So no for Disney at the moment. Rich, how do you read trends to know if the company is doing well or bad? Richie, that's a great question. Okay, so Richie, this is Yahoo Finance. Yahoo Finance is a financial website which you can go and find out all kinds of information. Summary, news, charts, community, historical data, profile, options, holdings, performance, risks, all that kind of stuff. Lots of information out there. So your question is, how do you check to read the trends? Okay, simple, Richie. December 16th, 2022, the dividend was $1.78 per share. Okay, the very next dividend, March 17th, 2023, $1.51. Now, I don't know about you, Richie, but I do know 178, December 22, is higher than March 17, 23, 151, which means they made more money in December 2022 than they did in 2023. That means they're losing money. Okay, making money means it's higher and higher and higher. Because remember, a dividend is a portion of the profits the corporation gives back to the investors. So if the number is consistently going up, well, that's great. They're consistently making money. But if the number goes down, that means they're not making as much money as they previously did. So why would you put your money in it? So you go to Yahoo, you can go to any financial website. Take a look at the historical data. The historical data, it gives you, all right, hold on a second. Well, this is just the dividends. It shows you from the very first dividend that they paid, how are they progressing? Are they consistently profitable, higher and higher and higher dividends? Or in this case, up, down, up, down, up, down, up, down. Yeah, you choose where you think is best for your money. Okay, I'm just showing you what I do with my money. Consistency of profitability. That's mine. Okay, good. We already looked at Ford. Okay, right there. Is it worth getting into finance? Well, Isaac, it all depends on what you want to do with your life. Because, Isaac, you may not know, but what I am teaching here right now was created for my 9-year-old daughter. Simple, safe, predictable, consistent, and no way for her to lose. Okay, so I came up with 5 rules. Rule number 1, Never buy something you don't understand. Never sell at a loss. Make sure the company's consistently profitable. This one ain't. Make sure the company has weekly options because I want weekly cash flow. And then 5, make sure the numbers work. Well, what are the numbers? The numbers are pretty simple. Okay? What am I buying it for? 109.10. What am I selling it for? 109. What am I collecting? 127. Well, 127 is more than 1% of 109. Well, that's 1%. Okay, so what's happening? Well, here, the stock goes down, then it goes up, then it goes down, now it goes up, now it's coming back down. I wouldn't buy it because it's in a downtrend at the moment. But if it was in an uptrend, okay, if it looked like this, down, up, here's the high, here's the bottom here. Look, 3 days to the upside. 1, 2, 3. You can't argue with that. 1, 2, 3 to the upside. I would jump in here. Okay? I wouldn't jump in here. Because see, it went up, then it came back down again. Now, I'm only looking for 1% a week. That's not a lot of money. It's easy to get. Now, 5 or 10% a week, that's a little bit more challenging. But 1% a week comes to 50% per year. And that works for me. Okay? Now, I've been working since 1973. I have a very small nest egg. It's not huge. However much money you think I have, I probably don't. But it is enough so I don't have to worry about money again. Unless something catastrophic happens to me. I just so happen to be in good health, and I don't have to worry about anything at this moment in time. So my account does grow very, very, very slowly because most of the money I make, I use to pay my bills. That's exactly what's going to happen to you when you retire. A certain portion of the money you have coming in gets to go to your bills. Okay? Food, shelter, clothing, entertainment, those kind of weird things. Okay, are you expecting a red day for SPX? Don't know, don't care. I don't do SPX. Sorry. Rocket Dodger, I don't do SPX. Chasing Jack, if you missed anything, you can always watch it again on YouTube. Yeah, he's right. Oksana, good night. It's great that I could make it to the end. It's 5 a.m. over here. Das vidanya? Spasiba. 5 a.m. over here. Time to get ready to go to the gym. Alrighty then. Das vidanya. I look forward to learning more. Rob, I'm here every night. Cheers, mate. Was Saul good or bad? SOL, shit out of luck? Yeah, no. You weren't here for it? Okay, so DeSantis. Okay, right now it is, what's the clock? 12:20 a.m. Eastern Standard Time, February 24th. Now, this is being recorded, so you can go to YouTube and watch the recording as soon as I'm done. Okay? Are you using a trust to trade out of? No, mine's in a corporate account. So it means any money that I lose, and any money that I make in trading gets offset by the losses of the corporation. So you can figure out how you best want to do that. Okay? So if your corporation keeps losing money hand over fist year after year after year, well, the profits from one offsets the losses of another. So you really need to, if you're worried about taxes, you really need to talk to a tax strategist or a tax planner. Okay? Okay. Miguel, trying to turn 90 into more. I appreciate all the info. Alrighty then, Manuel Gamiz. All right, I'm here every night, dude. What about net nets? What the heck is net nets? Belvoir. Oh, if you want to earn, let's work together. We are a highly qualified clothing brand. Okay. Hymns, we already looked at that one. PLTR, we already looked at that one. Already did that. PLTR is a no, no dividends. PLTR, nope. Hymns was a no. Do you trade in weekly dividend stocks? Okay, Richie, I don't know any company that has a weekly dividend. None. Now, I know companies have weekly options, but no weekly dividends. Can you explain what SOXY is? Nikki, SOXY, huh? SOXY. Yield max target 12 SA blah blah blah. It's an ETF, it's an electronically traded fund. Okay? Now, I don't do it because of several reasons. Number one, it's a monthly. Sorry. And it doesn't have 20 years of historical performance. Sorry, Nikki. Chasing Jack. Have a good night. Thanks for all the info. You got it. Quantum, what type of corporation do you use? It's a C corporation. Amazing. Cool beans. Doing a great job. Wonderful. Think or swim. Are you an option trader? Yes, I am. What about QDTE? We already looked at QDTE. It's a no. All right. My eyes aren't focusing anymore, guys. That means it's time for me to call it a night because I got to get really close to be able to see this, and that's not a good thing. All right. So my eyes are, wait a minute. My eyes are heavy. My sights were dim. It's time to stop for the night. There she stood in the doorway. I heard the mission bell. All right, bye, you guys. See you again tomorrow. Uh-oh, something went wrong. Okay. So, catch you guys later. All righty. So, bye. And now the end is near. Hey, do you mean exchange traded? No, dude, I mean ETF, electronically traded fund. You go to the stock market and you take a look at these ETFs. It's a big freaking machine. And what do you think machines run on? Electricity. You're giving your money to a computer to trade for you. You want to call it exchange? Fine, you call it. I call it electronic because it's all computers. So yeah, you're giving your money to the Terminator to figure it out for you. Yeah, no thanks, not for me. But anyway, you have fun with it because I don't do ETFs. I don't trust computers as far as I can throw them. I've seen the Terminator enough. I've seen a lot of those. What was the first one? Space Odyssey. Yeah, computer turned and yeah, killed off all the humans. Yeah, no thank you. Okay, I write stuff down. I do things manually.